market's opening in 15 minutes, so maybe
do NASDAQ because Walter is on gold, isn't he?
Yeah,
hello,
that's
everyone.
right.
I think we're live.
All right. How's it going, guys? James, Walter.
Good day, everyone.
Hey, very well, very well. How's everyone doing?
Not too bad.
All good. Sorry about that. All good. How are you, Walter?
Very well, thank you. It's been an interesting start to the week, huh?
Yeah, sure has.
It has, yes.
I think I'll let you guys get straight into the stocks and the currencies that or whatever you're busy with, and then I'll follow up with my instruments later because as the market's about to open in 15 minutes, I guess you guys would like to lay the foundation.
Yeah. Walter, if you want to take the lead there. Well, you're going to look at gold, right?
Yeah, sure. So, yeah, I'll be looking at gold today. So I'm just going to open my charts for that. So, a second.
Yeah, then I'll have a look at the NASDAQ for you guys afterwards.
There we go. Hey, so yeah, I mean, last week Friday was interesting because that $3,000 mark per ounce for gold was finally reached, and I've sort of like eyed up that level for quite a while now. So yeah, so now it's sort of like been an interesting period for gold, and as one would anticipate after the market takes out a significant level, it's a period of accumulation that has been taking place, and today, that's why today was a little bit more tough, but I kind of expected it. The market has been accumulating, and that's been sort of like stuck within this range, right? So, but yeah, so with accumulation range, like I mentioned before, I always trade accumulation ranges accordingly. So I set reasonable targets within the range, and yeah, so I'm not expecting price to break out anytime soon. It could break out tomorrow, the day after. My goal is not to predict when a breakout would happen, just to react based on what I'm seeing. So yeah, so I took a trade earlier today, which was working out well, and then it got stopped out because price came back up and took out this prior highs. I didn't take a re-entry because I was waiting for New York because I was anticipating that because it was a retail sales data that obviously was going to come in, which already has come in at 8:30 a.m. this morning, New York time. Right. So I figured the market was just being funny because of retail sales, and then like afterwards I'd probably get a much better opportunity. My bias is short. It was short this morning. It's still short right now, and the reason being is because obviously after price took out that key level of $3,000 per ounce, we did see an inflection back into the range, break of structure, the first instance, second, third instance, and then the 30 minutes. I do see the same thing, but the 30 minutes is still, so although the 15 minutes has completed a bearish trend cycle, the 30 minutes is still in that bearish trend cycle. Hence why all of this is fair game. As long as like price is moving within this range, it's fair game. But I am anticipating a short towards the most recent low. So the low at $2,978 per ounce. And at max, perhaps even a lower low that was created at 2,976.28 per ounce. So those are my two targets. The price action from earlier today created a relative equal lows within the range. So all this did, it solidified my bias. So so the fact that the market came down to this prior low, didn't take it out, create a relative equal low, and then ran up to take out buy-sell liquidity. So obviously buy-sell liquidity above this prior high, as well as taking out the high of Asia. So in London, price came back up, took out the high of Asia, and I was short in Asia, so I got stopped out above that high because my stop loss was residing above that high. So now there is a second entry opportunity I'm looking for. So on the 15 minutes, it's a lot more obvious on there. So market, after taking out these prior highs, the high of Asia, as well as a prior high that was created on Friday, we've seen that the market has given that bearish inflection to the downside, break of market structure. So this move to the upside was pretty nice because this was a full bullish cycle. So we had the initial expanse, secondary retest, and then that final rally into that prior high. And then after that, the market gave a higher high, and then traded back into the range, giving a new break to the downside, right? So this is the first instance and secondary instance. at this point, my AOI is obviously going to be the most recent order block that was created. So which is going to be within this initial range before the break to the downside, right? So again, the setup for me is very simple. It's a textbook setup. So I've placed a pending order obviously what I look for is that confluence of, is there an imbalance within the range? Of course there is. So there's this imbalance right here. So that imbalance obviously is coinciding with the actual order block itself. So hence why I'm just going to place a pending at the low of the order block. Stop goes above the high. And then I'm simply targeting the low.
Retest of that sort of, and then get short. Okay.
Exactly that. And then I'm aiming to
orders, right? So you got a resting order there.
Mm-hmm.
So you use limit orders, right?
Yeah, I only enter the market with limit orders the majority of the time. So I would only enter with a limit order. In this case, like for me, it's just a waiting game. If it does come up to retest, sometimes it doesn't. Sometimes it leaves that area unmitigated and keeps from running to the downside, and obviously that creates a future opportunity. But if we do see that retest, then for me, I do want to enter at the tip of this order block. And then like my target is this is going to be a small trade. Again, I'm anticipating price will take out these equal lows that were created today, as well as the prior low that was created on Friday. So this is Friday's low. It's a very, very significant area of liquidity. So that's where my final target will be. So again, RR-wise, I'm looking at around like a 1 to 2 on this trade. And that would allow me to sort of like end my day because I've taken a loss initially on this position. So that would allow me to make back some of the money I lost on that earlier trade and potentially end the day just slightly above break even.
Cool.
So so that's it for me for XAU USD. That's the only setup I'm anticipating in New York today. A short continuation trade from the bearish order block that was created just before New York Open.
Gotcha. Cool. You want me to go over the NASDAQ quickly? You done, Walter?
Yes, of course. Yep, all done. I shall hand it over to you. 1 second.
Yeah, I like that, Walter.
Stop sharing.
For what that's worth, I like it.
Thank you.
Good stuff. Good stuff.
Much appreciated.
Although I'm long on gold, so I kind of like it, but not totally.
Yeah, I mean, long is a valid buy. So on like the 4-hour daily, 100% I'm bullish on gold.
Sure.
I just see a short-term intraday opportunity, which I'm looking to capitalize on before the anticipated bullish continuation to the upside.
I think that's a great strategy. I like it.
Yeah,
perfect.
Thank you.
Right, guys, NASDAQ quickly. As you know, I like trading the NASDAQ. From those viewers that's joined us today on whichever platform you're at, like trading it during the 9 a.m. to 11 a.m. Eastern Standard Time window, if you might want to call that. I've just got a 1-hour chart open here. We obviously had that pretty strong decline in NASDAQ and the S&P for that matter. And then we've sort of been bouncing a little bit, and this was since last week, right? Been a bit of a range, and prices now again reached the top of that first bounce, which is around about 19,760. So it's right there at the moment. Again, I do trade smaller time frames. I just wanted to give a quick recap where we are. Whether this is all corrective or the start of a larger bounce to the upside, obviously we won't know that until, I don't know, end of the week or maybe later. But I'll be pretty happy trading either way, right? So I don't really have a bias. I do think we could potentially bounce a little bit higher on the NASDAQ. But again, according to what the strategy tells me, all the steps that I do follow on the NASDAQ, I'm be interested in price taking out the 1976 or 19,761 level, which was actually a high that was printed here on the 12th of March. Right, price just did that slightly before my 9 a.m. time window. So it's a bit of a bugger. It is moving slightly lower in the intermediate term or so short term. Price is a little bit bullish on the 5-minute time frame. But if I want to get out my path tool, I'll show you guys what it is I would look at for a potential trade here. So I would like price to find support somewhere. It has been making slightly higher highs, higher lows. Do something like this, and then reverse lower. And then similar to what Walter does, I want to see that price structure break of this uptrend. In this case, it'll be a high low that's taken out, at which time I'll switch to a 1 minute time frame and then also look for fair value gaps and use that as my trade entry location. So until we do get a bounce higher here, and it takes out these previous highs, as we call that liquidity sweep, followed by a reversal. Not too much happening. Also pretty aware that Mondays are pretty quiet for me normally. So hopefully we do get a setup that occurs during the time we have here today. On the downside, almost got a double bottom type of formation here. And this was on the 16th, obviously, yesterday when the markets opened in the US. Created a low around about 19,541. I can drop a line in there. And then during the overnight session today, or the Globex session, slightly above that, 19,543 to the downside. If we do get some sort of a sharp movement lower, price fails to make a new high, as I would like to potentially want to see first, but it doesn't. Obviously, it's going to do what it wants to. Then on the bullish side of setup, I first want to see bearish price action, taking out those lows, and then again see a bounce to the upside. Switch to the 1 minute time frame. Wait if we can see a price structure break as well as a fair value gap, and then hopefully get a retest of that fair value gap with a potential entry. So let's see. I do believe, Walter, that you say that we already had news that came out at 8:30. So I think we're pretty clear.
Yeah, so we had retail sales.
Impact news events situation, right? Yeah.
Yeah.
So nothing really standing in my way news-wise. Now it's just got to be price action doing its thing and then following along. Decide if we want to go long or short. And this after either one of these levels to the upside or the downside's broken. And obviously followed by reversal, right? But again, with this strategy, most of the price action also show the action happens around the 9:30 a.m. mark when the stock market opens. Most volume come in. So sometimes we get a reversal that occur prior to the 9 a.m. mark, but majority of the time around 9:30 or slightly after. So let's see. That's me.
Yeah.
James, you want to show something there on your side?
Yeah, sure. It's interesting how everyone has a different trading style, eh? And what's also interesting is retail sales and all these numbers that are coming out, jobs numbers, and we got the FOMC this week on Wednesday, 2 days' time. Whether all of these numbers that are somewhat weak, somewhat, some of them a little frothy as well, actually, but whether the market regards bad news as good news or good news as bad news or vice versa is always a tricky one. But I think at the moment, anything that's kind of negative might actually spur on the stock market a little bit and encourage the bond market and potentially encourage Jerome Powell in the next or the following meetings to consider at least reducing rates by 0.25 or 0.5%, which could be good for the markets overall. But
isn't Trump replacing him with someone else? Or what's the story there? I'm not sure.
Sorry, say again?
Jerome Powell. Is he still around? Didn't Trump replace him?
Yeah, he's not going anywhere, he says.
He's around for now.
Yeah, he's not going anywhere. So let's just see if we've got some charts. Have you got my charts up on the screen? Are we a bit slow again? I think one of you, Richard, you've got to get rid of your chart so that mine show up. Okay, there are. Hang on, it's meant to be there. It's showing. Let me try again. Stop screen, present, share screen. There we go.
Something's happening now. There we go. Awesome. Yeah.
So I've just got a couple of different charts on here. The one that I'm busy trading with, the most recent trade I've just taken, is natural gas. And I know this is not pertinent, but some of the people here may be from my own group. And we just took a short a couple of hours ago this morning on natural gas. We've been shorting all the way along, as you can see. These are all our positions. We hedged over there in the middle. We then got rid of that hedge, took profit on that and sold. We hedged here again and then exited the hedge. And we took a trade a couple of hours ago short at $4.12. We're trading at $4.01 now. So nice move down. And it's kind of like, it's a little bit dramatic. That all took place in an hour or two, maybe only an hour. And are we going to get a bit of a short, not a short squeeze, but a long squeeze, similar to what we've seen prior to this in these last big moves up? So that's one trade we took this morning. And we've been trading a lot of natural gas recently and Brent crude oil. We trade WTI, excuse me. And we're also short on WTI. We've taken these positions, that's natural gas. We took these positions a while back, and we were taking a lot of short positions on WTI as well, mostly short over the last couple of years. We're still short. A lot of people are asking, are we going to break down through the $65 level on WTI, the level that I've called Moab, the mother of all breaks, which is a type of weapon used by the US military, mother of all bombs, used to destroy destroy deep underground bunkers and things like that. But this level is bound to break at some point in the near future. We've tested it so many times with a descending overall structure, falling structure. And we're just in a little, I suppose, consolidation, wedge, triangle sort of formation down here, bear flag, whatever you want to call it. And I think we'll carry on moving down. We've got to get a break and a close below $65 though, in order to get this moving down. And I think when it does, it'll be pretty rapid. It'll probably collapse quite fast, much the same as natural gas has done today. So those are the things I'm watching, and the market's open. And I'm also long on the NASDAQ, long on the S&P, long on Coinbase, Tesla, and Google. Nothing's changed since our last live stream, and we looked at these together. So, but I'm not going to comment on those guys because I'll leave that up to you.
Awesome. Yeah, that's
if anyone has questions, sorry, Richard. If anyone's got questions in the audience regarding any of the instruments that either Richard or Walter are not covering, I'm happy to cover those if you just post up the questions.
Cool. Yeah, that zone on the crude oil, I do agree with you. I think once that breaks, we're going to see a very fast move lower.
Yeah.
You know, that's sort of what they say. It's like a punching bag. You know, it's been punched quite a few times, and eventually it's going to break.
Yeah. And I think we've got quite a neat structure here to work with as well. We've got a falling channel, which has only been tested at the bottom once. We've been testing the top multiple times and failed it every time, which is quite telling, because normally after 3 touches, I'd expect the 4th or the 5th or the 6th to fail, and this should have broken upwards, but it hasn't. And that top trend line is as solid as you get. The bottom part of the channel has only been tested one time, so it's really overdue, and that will take place on the 26th of March. And we'll get down to $57 on the 26th of March. Did you see that crypto guy who's been predicting the turn at $84 on the 14th of this month?
$84 or 84,000?
84,000, sorry.
Okay, gotcha.
Yeah. Everyone in the Twitterverse is talking about this guy who said it would be 84,000 on the dot on the 14th of March 2024, and it was. And he said once that happens, it'll go up to $444,000 without looking back.
Well, those are the long from there. Hopefully it works out. That's a considerable increase.
Yeah. So
$444,000. In what planet is he on?
So I'm predicting WTI oil to be at $57 on whatever date that was, the 26th of March.
Who knows? Maybe you're right. We'll see.
Now that's it for now, for me.
You see anything on your side, Walter? I mean, you're looking at a half-an-hour chart there, 15-minute chart, right?
Yeah, I mean, price is still climbing back towards the high, but yeah, I mean, this would be an interesting week. I mean, this week things should start getting back to flow, but I'm anticipating that gold is probably not going to give a lot of big runs this week because, yeah, I'm just used to it. Like whenever it delivers like a major move, it will consolidate or accumulate for a few days before sort of like any big moves away from that. However, on Bitcoin, I am watching opportunity on Bitcoin. I mean, a trade on Bitcoin right now, actually. So I can quickly just talk about that if you want me to.
Yeah, please do.
Let's take a look. Yeah, so Bitcoin has been pretty good. I haven't so this is my first trade of this actually for a few days because I've been sort of like waiting for things to calm down a bit. So right now I'm bullish. Again, I'll just give the bigger picture and then I'll explain sort of why I'm bullish. So I mean, last week obviously we saw that major move to the downside where Bitcoin came down to 77K, and then afterwards it bounced back up and came into range. Right now, I am anticipating a continuation. Like this is just one part of the move. Like if we go on the 4-hour time frame, we are still in a bullish trend cycle, right? So we've seen that move to the downside. We've seen that major inflection coming back into range, and then I've seen the market has given a secondary break. So again, the market is fractal. So the same patterns, the same structures that we see on the higher time frame tends to repeat on the lower time frame, and vice versa. So it's the same structure I look for, is that break of structure, and then afterwards, obviously, the market traded into this imbalance. So that imbalance retest is so important. And of course, a big part of that as well is the market should take out some sort of short-term low, short-term high. But the idea is this is still very much a bullish market on the 4-hour time frame. So we have the first instance, then the market contracted, and then we have the second instance, and the market contracted, and then anticipating one more push to the upside. And then the target is, so we have these relative equal highs that are sitting at around like 86.6K on Bitcoin. I'm very confident that if we do see that continuation to the upside, it will obviously take out the recent high, but it will keep on rallying to take out these relative equal highs. And then if price were to keep trading above this high, because above this high, it's a really balanced market, right? The market is really balanced. So we have no imbalances in this region at all. So so after this high, the next area of significant liquidity pool is going to be at this high, which is 91K. All right. So if the market were to break above this high and were to keep on rallying, then we are likely going to see the market rally into 91K. Okay. But right now, again, I take my trades piecemeal. I'm not trying to take big bites. So that sort of like 86K mark is my target. So in terms of like the setup itself, again, it's the same stuff. I'm looking for microcycles on the lower time frame. So specifically the 30 minutes and the 15 minutes. So this might seem a bit confusing, but the picture was pretty clear. So I remember looking at this on Sunday. The market gave this initial break of structure, and then I was like, okay, it's going to be a continuation into this order block. So the market obviously completed that cycle by giving that final push to the downside into this order block. After that, it bounced back into range, gave a full bullish cycle to the upside. So this is a reversal move before coming back down. Again, gave another full bearish cycle to the downside. Again, if you're looking at this without like cycles, you're probably going to be seeing a lot of noise going on. But I see structure. I see price action is repeating itself over and over again. And then now, obviously, what I'm looking at is the beginning of a new bullish cycle. We've seen that first instance. Second instance, my AOI was this bullish order block, right? So my entry was very simple. It was within the order block itself, because within the order block, I saw a bit of confluence that I decided to take advantage of. So I'll just go to the 15 minutes where it's a bit more obvious. So on the 15 minutes time frame, right, the market delivered a full bullish cycle to the upside. And then after that gave a reversal into the 30 minutes bullish order block, breaking below this low before trading back into the range again. So what I was then looking for from this point onwards, because obviously like before each session open, the market would likely contract and take out some form of short-term low within an order block or going trade into an imbalance. So my area of interest was, so just before the New York session, I saw the market was essentially like trading to take out these lows. And obviously after the revenues release as well, I was also waiting for that to see what the market does. So the market came up, took out this prior high, and then came back down, took out the short-term low, traded to fill this imbalance. So my area of interest was on the 5 minutes time frame when the market was climbing down. I noticed, no, it's actually it was on the 1 minute. There was a much smaller imbalance right here that I was like, okay, if the market trades into that area, I'm going to enter. I'm going to place an order. So it was right here. I'm going to make this a different color so you can see.
Did you actually take a long there?
I did. So I waited for the reaction. So my entry was very. So remember, I only enter pending orders because again, I use a trade copier, and with the trade copier, it would only copy my trades if it's a pending order. So my discipline is I can only enter pending order. If not, my other accounts wouldn't receive the same trade. So I waited for this reaction. The market reacted, bounced back into the range. As soon as that candle closed, my pending order was, because I was anticipating sort of a retest to the downside. So I just placed my pending order at the top of the candle. The market came down, triggered the order. And then my stop loss was, I was actually doing this as you guys were speaking. I was like, this is because my alert went off. So I was like, okay, I can't let this go. And then stop loss just right below the order block. So again, this low that was created earlier today. And then the target is simply, again, high of the range. So it's a 1 to 6. I'm happy with a 1 to 6.8. And again, the reason because it's high of the range, because the market, if we look at this on the 30 minutes time frame, the market is in an accumulation range as well. So my assumption is always the case. If the market is in accumulation range, I would assume the market will stay in that range until it breaks out. So I'm not trying to predict a breakout. And there's also the 800 EMA. So again, as I mentioned in the last session, 800 EMA, I've seen from experience, tends to act as an area of dynamic support and resistance. So whenever I see the market is trading towards the 800, I always anticipate some sort of a reaction. So it could break or it could just reject it. And we've seen a lot of the time that 800 in a bearish market for Bitcoin has acted as an area of resistance for price, right? So again, it's not just the 800 I'm interested in. There's of course confluence with price action. But the 800 EMA is in proximity with the high of the range, hence why for me that's the most reasonable profit target. Yes, I know that I'm anticipating the market to get to 86K, and I could decide to set my target there and aim for a 1 to 10, 1 to 11, but I know that that's going to be greed speaking. And one thing,
Walter, sorry for interrupting. Will you like?
No, go for it.
If price gets that high, but it doesn't reach your target, will you start like limiting risk, go break even, trailing stop, that sort of thing, or?
Well, it gets how high to 86K or to the high of the range?
That little range that's in right now, where you got that number 2, for example, and it really gets close to where you got your target, then you're going to start moving your stop upwards above break even.
No, so with the way that I work with my stop loss, I always allow it to run. I don't do stop loss to break even. The reason being is because more times than not, like because I'm very focused on optimal entry points. If my entry is in an optimal point, I would anticipate the market to maybe sometimes bounce around that area for a bit before rallying, right?
Times. Gotcha.
Sorry?
Yeah, it could potentially test it multiple times, which happens quite a bit, right? Yeah,
it happens quite a bit, and sometimes it happens quite fast, right? The market could go take out this high, because this high is, again, this is like a smaller accumulatory range, which is more obvious on the 5 minutes time frame. So the market could take out the high of this accumulatory range, bounce back in, take out the short-term low, and then we could see a very fast move to the upside. That could happen. So as a habit, I just give, so the whole point of me having a stop loss is to A, give price enough room to breathe, but also B, to protect my downside, right, my bottom line. But the moment I start moving my stop loss, it completely changes the dynamic of the trade, right?
But will you, for example, consider getting out? Let's say price misses your target by, I don't know, 2 ticks, 3 ticks. and you start seeing a very strong decline, would you still leave it
No,
there?
no,
Or do
because
you consider getting out dynamically by whatever you're seeing?
I don't exit dynamically unless I see a very strong reason, and the strong reason is if I see the completion of a bullish or bearish cycle,
So the
and
counting
it's
that-
close to that, and it's taking out some sort of like short-term high or short-term low. But in this case, because yes, on Sunday the market has already taken out any form of short-term high within this range. The next major liquidity pool is above this high. So if price were to trade close to this high, I'm very confident it will take out the high. So I let the full trade run. But like, for example, with gold earlier today, where I got stopped out, and I could have taken profit on the trade, or I could have moved stop loss to break even to protect my bottom line, but I didn't, because I'll just go to my gold chart. Yeah, like with this setup, when I initially went short here, I saw the market came down. It gave a full bear cycle on the 15 minutes time frame. And it left its equal low before pulling back London Open. Now, there was something in my head. I was like, maybe I should just take my profit. And yeah, this might take out the high. But then again, I just have this habit of, I just prefer to not interfere with my setups too much after I'm in the trade, because there's a high likelihood of making a decision based off emotions or something that is not in line with my initial trading plan. Yeah. So that's why I just let this run. So when the market came up, it stopped me out, and I was like, okay, it's a loss in my trading plan. All I need to do is wait for the next opportunity, which could happen at New York. Because if I get stopped out, I always understand why I get stopped out. So I would never get. So it's very rare that I would get stopped out and be like, oh shit, I got stopped out. Why did I get stopped out? So a lot of the time, if I get stopped out, it's like, oh, so complete bearish cycle, left equal low, came back up. There's a red news coming up. This is what price sometimes does before red news events. So I understand it's like price is engineering some sort of sell side liquidity to take out that pool of liquidity. The question is whether price will give me an opportunity to re-enter or not, which is completely outside of my control, right? But yeah, I just like to let the trade run, and that's why I also prefer to set reasonable profit targets, because I realized a few years ago, like there are times where I'll enter a good trade, but then I don't take profit on that trade because my profit target is too ambitious. I'm ignoring price and I'm focusing on what I want as opposed to what price is telling me. So what I've learned to do is I've learned to say, okay, what does price look like it's willing to deliver within the scope of what I'm looking at? What is the most reasonable objective? And then as long as I'm aiming for the most reasonable objective, there is no reason for me to keep interfering with my trade. I can just confidently let it run. But if, for example, I decided, oh no, I think I think Bitcoin is going to rally to, and I think it will at some point rally to 90K, right? And I decide to enter this long position and set my target at 90K because I want a 1 to 22 risk reward. That's ambitious, but that's also greed, because as an intraday trader, I acknowledge that price doesn't move in a straight line. Yes, it will get to 90K, but we don't know the level of volatility between where price currently is and 99 and 90K, right? There could be crazy volatility between those two range that just holding a short-term trade may not be feasible. But if I were to aim for something more reasonable, logical at 85K, that will most likely hit. And then I can then prepare for the next trade tomorrow. If, for example, tomorrow price is at around 86K, and I see an opportunity to take a long from 86K to the next reasonable target of 89K, then I take that trade. Does that make sense? I'll be making a lot more money than simply holding a trade to 90K.
Absolutely.
Yeah. Awesome. Richard, have you got a trade coming up?
I don't actually. It might be like a trend continuation type setup, but it's not what I normally trade. So not really anything happening. I mean, we had a nice spike here on NASDAQ. You're not seeing my chart at the moment, but I don't know. Do you have anything to show, James?
Yeah, sure. I'll just go through a few other charts while the market sets up. Are we on? Yeah. Oh, that was easy. What did you do? I didn't press anything. It just appeared again. All right. So let's have a look at some of the currencies. I think the guys will be covering this a little bit later on, so I shouldn't do too much on it. But generally, just looking at the dollar index, I have two positions on currencies. That's short the euro yen and long the dollar yen. Nothing on the majors, on the other majors. But this is the dollar index, and it's broken down quite dramatically. We don't often see the dollar moving so quickly down without any pullbacks. And even though we've consolidated for more than a week right now at this at around about 103.50, we still have not had any real retracements. And we've got all these moving averages and order blocks and swing highs and lows all above us, which we could and should retrace to in a healthy trend. And I think we could get back up to the 200 period moving average, which is at 105. We're trading at 103.50 now. The 20 period moving average, which is the short-term daily momentum moving average, is also above there, quite a long way from where we are right now. So very overextended to the downside. And like I said, the dollar doesn't often move in one direction. If you look across the left-hand side, you can see how zigzaggy it normally is. And then compare it to that last little section. It's just not right. So I think we should get a little bit of a pullback to the 200 period moving average and the 20, and maybe that green block top and this market structure break. And that's all up at around about 105 to 105.20, which is 150 pips above us, which would mean about 100 pips on the euro, 100 pips on the pound downwards if we do get that retracement. And you'll notice that the euro and the pound, I'm not going to open them up, but the purple lines on the euro and the pound are the 200 period moving averages on the day charts, and the green lines are the 20 period moving averages, almost touching in both cases, and also on the dollar index. So that makes a good target for a little bit of a pullback on the euro and the pound. The euro is trading at 1.09, and we could pull back down to 1.0720 or 50. And the pound's at 1.2980, we could pull back to 1.28. So 100 to 150 pips on both of them. But the one that I'm in, the dollar yen, pretty similar sort of scenario. Although we've already reached up to the 20 period moving average, we've got a trend line coming down, and the 200 is over there, and the 50 and the 100 and so on. And similar to the euro and the pound and the dollar index, I think we could get a little bit more of a pullback to some of these pretty key levels at around about this market structure break, 151-ish. There's the 200 period moving average. It's also a 38% retracement level. It's also a previous swing high to the left here, previous swing low over there, swing low over there, swing low. So basically the top of that pink zone is a good target, I think. And that's what I'm aiming for in this trade. So about 151.50. We're at 149.90, so about 150 pips, which is about 1% on the dollar index. So overall, in summary, I think the dollar could pull back, strengthen about 1%, and then continue on downwards. I generally think that the dollar will reach the bottom of its own range, which is at 100 at the parity level, and that's really just at the bottom of this range. And I do think that the dollar is probably going to be stuck in this range for quite a long time. If we ever get down to 100 again in the next weeks or months, I expect we'll probably bounce back off the bottom again and move back into the range once more. So I don't expect anything major going on the dollar in the next number of months. And you can see that on the 10-year yield and TLT and those sorts of instruments, which are also kind of bogged down right now. So that's my feeling on those, on the Forex majors. And then on this one, the euro yen, just to finish this off, it's a pretty interesting structural pattern, this. And for those of you who like chart patterns and structures and that sort of thing, maybe you guys in the chat with me here, basically we've got a long run up. We've got a bear flag pole, a sideways consolidation, which is pretty much a parallel flag, and then the measured move using that flagpole. And given that, I think that the yen is due for a bit of strength overall in general. That the measured target would simply take us down to this black line at around 144.50, which is also in that consolidation and swing high volume zone over there, down all that bottom. All this is quite thinly traded between 145 and let's say 155, that whole sort of gap there, fair value gap, if you will, is right where this red arrow takes us through the bottom Bollinger Band, through that range low, and then down to the bottom. So that's one play I've got on, short on the euro yen and long on the dollar yen on currencies.
Can I just show something quickly, James? I actually decided to take a trade there just
a few
seconds ago. Sorry for interrupting.
Yeah, go for it.
Is it showing? There we go. So I took a little like trend continuation type trade. You guys know with this liquidity sweep, we want to see price take out a pivot point or level, as whatever you want to call it, high or low, followed by immediate reversal. In this case, we had a very strong move above a previous level or high. In this case, that one was set on the 12th of March. And with quite a lot of, well, let's say a nice long range candle to the upside, right? So we can also do a similar strategy around about the same time window or within the same time window. And if you get a very strong move like this, wait for a retest. In this case, price retested that breakout point, and it gave us a beautiful fair value gap right over here. So I don't know if you can see here on the right hand side of my screen, very quickly, and this happened like as you were talking. Entered there with four lots, and this is now on the CFD side. Price hit a 1-to-1 ratio, which is what I like to take half of my position off then. So I took 2 off there. So you can see that level over here. And the price you're seeing here now is obviously an aggregated price exit, right? So I already reduced my risk on my remaining lots. So if price now moves all the way down and takes me out, I'm pretty much on a position profitability side, going to walk out with like a break even, if that makes sense. Minus obviously commission and so forth. But if we do get a nice continuation here, what I like to do is I do trail my stop, but not like Walter. He's much more patient than me. I like reducing that risk, but I don't want to actually trail my stop too quickly either. So try to give price as much time to potentially give a nice breakout if it does occur, without getting stopped out prematurely. So I don't have another target here above me. If we do see a continuation nicely to the upside, I might switch to a 1 minute time frame. And if price reaches like a 1 to 2 or 1 to 3, if I'm lucky, then potentially I'll go to break even, because this is just a day trading strategy, a bit more on the scalping type of side of trading styles, and then get out. So currently,
Richard, what's your exit strategy if you don't see any particular exit signal and it
so what I'll do here now
upwards?
You see I traded four lots, took 2 off, I got 2 left. So that 2 I took off was at a 1-to-1 ratio. So then my stop was initially down here from entry. I think it was about 66 ticks. So I took 1 off at 66, right at that high. And then I reduced after price reached at 1-to-1. I reduced it to half, which is like 33, 34 of the original stop loss distance. If that makes sense. So doing that, if price does move lower here and it takes out my remaining lots, then it's pretty much just a break-even trade. So I won't go to break even that quickly. I first want to give price as much time or space as possible to do its thing, and hopefully in my case go higher, right?
Yeah. So as it keeps going up, at what point will you call it a day and say, I'll take my profit, or will you trail your stop loss using
if price takes out this high here, for example, right? That's almost a 2-to-1 already, or 1-to-2. Now, if price would take that out, then I'll switch to a 1 minute time frame, go to break even. If I really want to squeeze a little bit more out of it, Let me just go to 1 minute now. Oops, I'll need to refresh that. Give me 1 sec. Then I'll trail behind, and I can either decide, depending how fast the market's going. If it's going really fast and let's say shoots up to the upside, I'll trail my stop to below every green candle that makes a new high. So hopefully we can see that actually occur today. But as I said, it's that first 1-to-1 is crucial, because once that gets hit, then I'm only with half my remaining position. And then I'll reduce my stop loss distance also by half of what it originally was, meaning that if price does reverse and takes out that stop, then at least, I'm not losing on the trade anymore. But at the same time, trying to not get stopped out prematurely. So I would, like, for example, if price takes out this most recent high from where I entered to the most recent high, around 940, and time that is now. If it does take out that high, then I'll start trailing, go to break even, and trail my stop behind green candles making its way to the upside. But it might as well reverse from here. We'll see. It's one of those instances that we talked about earlier with Walter. We can see price actually retests those areas quite a lot of times. So if you go to break even too soon, then the chance of getting stopped out is it's pretty high in my opinion, especially if you're using these fair value gaps.
Yeah. Okay.
Yeah. Let's see.
Yeah, it does make a significant difference in profitability when you move your stop loss to break even too early and then end up taking sort of like avoidable and unnecessary stop outs.
Yeah, for sure.
Sometimes it's just good to let the trade run, give it room to breathe. Price doesn't always just move in the space of time you expect it to. It moves when it wants to move and when it's ready to move. So it's good to always just give it that space.
Just doing this for me is like now I can relax. The market can do it all once.
Yeah.
If it does hit my stop, I gave it as much space as I was comfortable with. In this case, it just so happened that it's pretty much at the low end of that fair value gap. Because if it breaks that fair value gap, it's probably going to be a high chance that price is going to just move lower anyway. So it just works out in this scenario that it's actually at the lower end of that fair value gap. But yeah, now it's like pretty much leave it up to the market. You can be relaxed. Obviously, it won't be nice walking away with a break even, but at least you're not taking a loss.
Exactly.
Yeah.
But you'll be in profit though, Richard, won't you? Because you've taken half of it 1-to-1 and the rest of it has adjusted to a smaller stop loss.
Because you move your stop loss to half of what the original distance was.
Yeah.
And you still have 2 left. Then you're pretty much walking away with, if you're playing the numbers 100% here, because I used that range tool. But you're pretty much walking away with a little slightly above break even, but not much profit, that's for sure.
Okay. And do you ever look at the VIX to determine whether you think the market's going to carry on going up or down?
No. Barely touch the VIX.
Okay.
When I trade options, we'll look at the Vega of basically whatever option you're trading, and sometimes the VIX as well.
Right.
But yeah, that's another lesson for another day. Talking about options, a completely different ballgame.
Yeah. Anyway, for what it's worth, the VIX is still moving lower, down to 21 now. So
that's why I think, as I mentioned earlier, I think we're going to go high on the NASDAQ and the S&P 500 on the indices. But yeah, higher, I won't necessarily say higher to all-time highs very soon, but at least a bigger bounce than what we're currently seeing.
Yeah.
James, I think there's a question for you on the YouTube comments.
Oh yeah, natural gas. Well, I'm not sure if we're meant to be talking about natural gas actually, because Ola doesn't offer it. But what I can say, excuse me, my mic's just a bit wobbly here. JM, what I can say is I don't really use indicators, so I can't advise you on what indicators you could use with natural gas. But generally, I just trade off support and resistance levels and determine and try and get an idea of the market direction based on some of the fundamentals and the price level. So natural gas is a commodity, so we trade from the top inwards and the bottom inwards. Generally, if the price is high, we want to be selling, and low, we want to be buying. The price is above $4, we want to be selling most of the time, if the setup's right. And so we're looking for opportunities to sell. So we sold this morning off resistance with a certain setup, a set of chart patterns that we identified against resistance at a high level in an overbought situation. And yeah, so if you do want to use indicators, I could just advise you to use the normal. I use moving averages as support and resistance levels. So I use the 20, the 50, 100, 200 simple moving averages on the 4-hour chart, but I don't use them as crossovers, and I don't use MACD or anything like that. So I just use them as simple support and resistance levels, and no other indicators. But if you did want to put another indicator, you could put a stochastic on, a 14.73 stochastic, if you would like to identify overbought and oversold areas. But because natural gas is a commodity, and because commodities are generally ranged markets that overall, over a long period of time, if you're going to use a stochastic or an RSI or a MACD, and you're looking for divergence and you're looking for crossovers and that sort of thing, or overbought or oversold, it's much better to do it on a longer term chart, let's say a day or a weekly chart, because these markets, although they are ranged markets, they can trend for days and even weeks on end. So you don't want to be using oscillators to identify overbought and oversold when you're in the middle of a short-term range in a long-term ranged market. You'll get caught wrong. You'll be caught short or caught long. So apart from that, I can't really help you. Although I am running a natural gas webinar on Wednesday, and I'm not going to advertise that on this channel either, but you can go and check me out on my own channel. There's an advert for it there. But natural gas is a tricky one, and because Ola Prime doesn't offer that as an instrument, I don't think we should be talking about it too much. And I suggest you see me in the webinar on Wednesday. It's free. That's it.
All right, cool. Yeah, we've had multiple tests of that fair value gap. So hopefully this is going to last. Hopefully this was just some sort of a zigzag into that area again. Or an ABC, as the electricians would call it. Single zigzag. So I'm hoping for continuation back upwards again. I do think if the price takes out this previous high, around the 19,835-ish level, then I'll go to break even there. Switch to, I'm already on, no, I'm still on the 5-minute there, but I'll switch to the 1-minute time frame and then see if I want to start trailing the stop a little bit as well.
Yeah, see, NASDAQ has taken out the high from Wednesday.
Yeah.
But S&P has not. But S&P does have a tweezer bottom, or something that's similar to that. Well, not quite, actually. It does have a bullish engulfing candle pattern from Friday on the S&P.
Okay.
So I think it looks pretty good for a bounce here. There are quite good stats showing that if we manage to hold this level for a few days and manage to make some progress to the upside, that generally this should carry on and have quite a good run ahead of it into the next few weeks and months, particularly coming off this incredibly oversold area of extreme fear too.
How are we doing on time? It's 10 past 10 at the moment. Guys, I'll let this play out. Keep you updated. Walter, you have anything to show there?
Nothing right now. At this point, it's literally a waiting game. Yeah, I feel the market is going to be slow this next 2-3 days.
Yeah. We're waiting for the
I can't wait until something more meaty actually comes around.
Gotcha.
Shall I carry on going through some of my charts while we're
Yeah,
waiting
why
for the
not?
market?
If it does break here on the top or stop me out there on that's remaining, I'll let you guys know.
Yeah, just switch it over, Richard, if you want to.
Okay.
I think you'll have, yeah.
The screen's yours.
Ah, fantastic. All right, so I just want to have a look at the VIX here while we're at it. Just what we were talking about earlier. This is the VIX. And so basically, we've reached up into these 20s. Up around here at about 20 to 30 on the VIX generally coincides with a fairly decent pullback on the S&P. VIX is related more to the S&P. And we got that represents a 10% pullback on the S&P. So does that. That was did we get that in December? I don't think we got quite that much pullback, but certainly in July, August, we got quite a dramatic pullback, about the same on the S&P and on the NASDAQ. But look how much more the VIX reacted to that. We're not seeing that at the moment. In fact, very muted, very weak, not giving that sort of blowout surge up. In fact, a lot of people thought because this was just stair-stepping up that it would just carry on going up, and we'd have a sort of a melt up in the VIX and a melt down in the markets. But actually what happened was we just made a tweezer top right there, perfect, and started moving down. We're now at the 20-period moving average. If we close beneath there, the algos and the hedge funds will start getting excited about the stock markets and start adding new, I imagine, call options onto their portfolios. And they use the VIX a lot for that sort of, particularly the 20-period moving average. So there we are, about to trigger perhaps some algos and some institutions start buying the NASDAQ and the S&P. And as we're talking, these are bouncing off quite beautifully. And the one thing that worries me, and I put this in my video yesterday, my technical video, one thing that worries me about the NASDAQ, and it's not a huge worry, but it's about to start to worry me right now, is that on this last direction. Sorry, what's that?
That kiss goodbye we were talking about.
Yeah, exactly. Yeah, my favorite thing, it's my best saying still this week. But look what happened on the last 15% pull down on the NASDAQ. We got down to the channel bottom and the 200-period moving average. Let's zoom in and have a look at that more closely. Although we closed for a moment just below the 200, we didn't really, and we certainly didn't close beneath the channel bottom. And that's that very, very beautiful long-term channel. On this occasion, the same amount of pullback, also 15%, but it took us below the channel and well below the 200-period moving average. And that's a big concern for bulls. Now, what we need to do is to reclaim the channel bottom, first of all, ideally today. Today would be great, or tomorrow. But then we need to reclaim the 200-period moving average and this high traded zone here, lots and lots and lots of volume in this orange yellow band of mine over there. You can see all the activity naturally at the 200-period moving average. You'd expect that, but the fact that we tried 3 days in a row and then failed it quite dramatically is obviously a concern for anyone who's bullish like me. And that kiss goodbye thing that Richard just spoke about is happening right now, and we don't want it to kiss goodbye. We want it to push up through the black line and then reach the 200.
Well, it nearly touched it. I've still got a bit of upside there from what I can see.
Just a little bit, yeah. So that's the NASDAQ. And the S&P is looking a lot better, I have to say, than the NASDAQ, because we didn't break any channels. We did break the 200, but it's not that far above us. And what happened the last time we broke the 200, no problem at all. Not a major issue. Same over there. Same over there. So it's not sacrosanct. It's not, once it's broken, and that's it. There's no looking back. So we're not too far from it. And also, we had a nice bullish engulfing candle on Friday and a one up, one down. This is one of my favorite candle patterns. It's not perfect, but it's this sort of twin wick type pattern where you get one wick up, one wick down. And that's normally a reversal candle pattern, particularly when you're trading certain commodities like natural gas. So the one up, one down reversal, almost, it's not quite a wick down, but a little bit of a wick there. And we're long right from the first occasion that we tried. We've now been long for 1, 2, 3, 4, 5. This is day 5 we've been long, making a little bit of progress, but not much. So that's that. And then while I'm here, and until someone interrupts me, and if you want to interrupt me, guys, no problem at all. This is the German 30, and a lot of people have been shorting this, including me. I'm not short anymore, but there's another example of the one up, one down candle at the top of a move. This is the German 30-day chart. One up, one down, and reversal. And that was through the top Bollinger Band, above the 20-period moving average, and so on. And just a nice, it's a pretty reliable reversal pattern, which I think works probably 70 to 75% of the time on most instruments. But the German 30 then performed an inside day and promptly reversed on Friday. And we were talking about this on X, actually, on Friday and Thursday. And quite a lot of people were going short, and I thought this might go long. And I was just lucky it went long. I didn't buy, but I didn't short. I was tempted to short it, but I didn't.
Okay.
So, but we'll short this again at some point. I think all of these indices will start to look for tops in the next weeks and months. Whether we'll get new all-time highs on the S&P and the NASDAQ and the German 30, I'm not too sure. I mean, it's quite possible, but I'm not 100% sure. But certainly the German 30, although this looks like it might carry on going up, I kind of still like this pattern. And until that one up, one down has been defeated, I'll still remain slightly bearish on the German 30, in sort of mentally at least. Yeah, so that's it on stocks. And then one other thing I wanted to show you. We were talking about gold. Yeah, just a quick comment on gold. Let me just find my bearings. Yeah, Walter, you were talking about this consolidation at the top here on gold. What I
That's
think,
right.
So I was variously long and short in this consolidation range, which lasted about a month. So, you know, as soon as you start getting up towards 3,000 after a huge run up, and gold does this, you know, you get big runs up and then sideways for 3, 6, 12 months, and then the next move up and sideways and so on.
That's right.
We had quite a long consolidation here for about a month, just under $3,000. And on Friday, we just nicked $3,000, 305, and held there. And my feeling is that after consolidating for so long, at such a key and crucial level, and with such a dominant candle, when was that, on Thursday? With such a dominant candle on Thursday, and holding above all of these
Thursday,
levels.
Friday. Yeah,
Thursday. Yeah, holding above that channel line, holding above both of these, the short-term trend line and the longer-term channel line. So I think the fact that we consolidated for a period, we've burst up higher and we've held, probably means that gold is going to go to, I don't know, 3,120, 3,180, 3,220, something like that. So I'm holding my long gold and my long silver positions for that reason. Otherwise, I'd be generally looking to be pretty cautious around now.
Yeah, I mean, so looking at it from the daily time frame, gold is most certainly still bullish. There's no doubts about that. But like you rightly said, you know, it has a tendency to, after taking out a key level, consolidate for days and sometimes even over a month. So right now, we don't know how long it will hang around that 3,000 level. But I do actually think it's going to probably keep on climbing, maybe for like a few more days before we see that prolonged period of higher time frame accumulation, and then some sort of a break out of that range, maybe to the downside, maybe to the upside. We don't know, but yeah, over the next few days, we're potentially going to see price climbing even higher than where it is right now.
Yeah. I'll just show you how I got into this trade out of interest. If those of you who are wondering, how on earth do you buy gold at these levels so high up with such, you know, look at all the mess around, very messy sort of consolidative chart. But there was a little clue on here. First of all, this is the 4 hour. So I've switched down to the 4 hour chart. For me, this is like a scalping chart, the 4 hour chart. So, so down to the 4-hour chart, we have this local local high here with a triple top. I don't know if you can see that clearly on the slightly fuzzy StreamYard screen, but there's a little triple top there on gold at whatever price that is. I don't know, 2,920, and we consolidated. So it's rather pretty, and it's, you know, triple tops are always nice to have around because when they break, they normally stay broken. And this candle here, where I went long, just broke above those and closed above it. That's all. Just that local triple top. And I suppose, you know, and we had trend lines above us and this recent swing high, the all-time high above us. And so that was a bit of a risky trade because we got to get through all that traffic above us. But we managed to do it like really easily, as it turns out. But at that point of getting into that trade, just above those local highs at the triple top, but under the trend lines and under that last all-time high, was pretty risky trade. But it was always likely, if it was going to work out, excuse me, if it was always likely to work out particularly well, because simply because of all that traffic above it, or, you know, all these resistance levels above it. And if it was going to get through there, it was going to have to put a lot of effort into it, which it did, and burst up through there quite significantly. And look how we're holding that top trend line now on the 4-hour chart. It's not as obvious on the day chart, but you can see it's quite beautiful. And there's the 20 period moving average on the 4-hour. And that 20 period is generally my exit trigger, or at least mentally. So as long as we're above the 20 on any time frame, we're bullish in the short term. When we're below the 20, we're bearish in the short term. And when you look at a 4-hour chart, it gives you, and there's enough time on a 4-hour chart to give you a good exit and entry trigger, because you don't have to be watching every 5 minutes. And also there's enough time to get out without panicking, without getting into a complete state about the whole thing. Trading off 4-hour charts is wonderful. You've got 4 hours between every decision. You've got 4 hours, which is nice. You can do all sorts of things in 4 hours. So on this 4-hour chart, we're well above the 20 period moving average, well above this trend line, and holding up there quite beautifully. And the only reason we got into this trade, as simple as this, was a triple bottom local breakout. And sometimes these funny little trades put you into a particularly good position. At the end of the day, you look back and think, wow, that was lucky. I got into that trade, but it turned out to be, like a $200 winner on gold or whatever. So maybe that's that sort of trade that we've got going there. And pretty similar on silver. When you go long on gold, you should, and you're convinced about it, and you think it's a good one, you should probably think about going long on silver at the same time. And we did exactly that. Silver moves a lot more. It's a lot more volatile. It's much messier. It's much more emotional. And it's also used in all sorts of different applications that gold's not used in. There's a big industrial factor to silver, which can sort of throw it off. But it is an investment metal too. And it's also crucially becoming more and more important in electronics and electrics and engineering and various chemical catalysts and that sort of thing. So I'm quite optimistic about gold and silver going forward, but I think silver might even have a bit more in it than gold. And and then just going across to energy.
Saying at some stage there was some sort of a ratio that silver, used to move in relation with gold, and then that was sort of like broken or something like that. I've heard that like some time ago.
Yeah. You can get it on TradingView. I don't know what it's called. I never look at it, but it's like something like the gold silver ratio. Gold, you'll find it somewhere here.
Oh, so is there actually a chart for that?
Oh, here we go. Yeah, this one.
Cool. Yeah.
Got it. Here we go. Gold silver ratio. Let's have a look. So let's go to a weekly chart. Oh, there we go. I've already drawn on this chart. Fundamentals favor A. So A means gold stronger than silver. I don't know if I agree with that anymore. I wrote that in 2023, so it's a little bit old. But as it turns out, this chart is moving up. Well, no, it's not. It's just going sideways. I mean, there's not very exciting.
Range. Yeah. Okay.
Yeah. I know there's a bloke
I
in
mean,
Joburg.
sideways is good. Sideways is good. Sideways is what we want to
Yeah,
see.
yeah.
That means that both markets are sort of like aligned. But when we do see a big volatility, then that shows that the ratio is widening. And it's like, yeah, then something really weird and fishy is going on in the market.
Yeah. Like there. Don't know what happened here. Silver collapsed, gold took off or whatever. I don't know. That was in 2020. Oh, I remember what happened there. Yeah. There was a big surge in gold and silver got left behind. But generally, if you look at this, it's pretty safe to go long on silver if you're convinced that gold's a good trade or short.
By the way, the 2020 surge, that was because, sorry to interrupt, the 2020 surge is because of COVID. During COVID, a lot of investors were pouring capital into gold, and that led to a larger disparity between silver and gold in that period.
That's
absolutely
right.
Yeah, and look at the overcorrection as well.
Yeah,
and then silver got a bid, and it returned back to normal, pretty much. So I think this chart really illustrates what I was saying. If you really convince, and it could be the other way around, if you've got a really good trade set up for silver and it's like a 90%er and long or short, and you take the trade, you should then consider doing the same on gold, because they have a pretty close to 1-to-1 correlation. It might be 0.9, the R squared value, but it's pretty high. And sometimes silver gives you more opportunity than gold, sometimes vice versa. Let me just get back to the silver chart here.
And the key word there is all things being equal. So it's as long as everything in the market environment is pretty much the same as usual, then yeah, we can anticipate gold to move in line with silver. But then if there's something crazy going on in the world, that could lead to more volatility in the gold market than the silver market. But all things being equal, the ratio should stay sort of like the same,
Yeah.
But every now and then you do have something crazy that happens that does lead to a greater disparity between gold and silver.
Yeah. No, absolutely. Yeah. So gold will tend to outperform silver, obviously, when there are uncertainties and stress points in the world and in the market. And silver will tend to outperform gold when there's a surge in demand in industry. And I think that long-term surge in demand is what interests me the most about silver, and also uranium. And I think they're pretty similar in a way that it's not an instant overnight surge like everyone thought it would be on uranium. And if you remember, I don't know if you guys trade this at all, but this is the URA ticker on uranium. And when all of this happened, surging up into these highs, and it happened twice, everyone got long. The whole market got long and got, just got too long. And this market has come back down again, all the way down to this level here. We're long again now, but we have a couple of positions. These are swing trades. That's a long, basically, these are like long-term account trades, basically, but long swing trades. And I think uranium's a similar sort of instrument to silver in that demand is going to be steady growth in, and that all of these uranium and even silver ETFs, silver miners, silver itself, all pretty good long-term ideas. But if you're a swing or a day trader, you've got to time those entries, of course.
Yeah.
All right, so VIX is still moving down. Anything happening on the trading side there?
Nothing.
Yeah.
Wait,
I mean, gold is just. Oh, sorry, Richard, you were speaking. Sorry.
No, it's just things have run sideways for me on NASDAQ. So still in the trade, but nothing happening. So sorry, Walter, you go ahead.
Oh, good. No, so I have a trigger on gold, my short position. I guess I could also answer James' question as well, because James asked about how to analyze liquidity zones in order to improve trade execution accuracy. It's a good question.
What? Sorry. How can I analyze liquidity zones to improve trade execution accuracy? I don't know the answer to that. What do you guys think?
Yeah, so I can answer. I'm just sharing my screen now. So yeah, I mean, right now gold has sort of moved back into my range of interest. So let's see if it respects its order block. Either it's going to respect it, we'll see it move back down, or it keeps on riding and stops me out. But it'll be interesting to see the reaction on this. But whilst this is doing its spin, I guess I could just, I mean, the best way to answer this question is visuals, right? So, and that's that's my preferred way of explaining things as well.
Walter,
I mean, firstly, like liquidity.
Did you enter a trade on
gold? Yes, I did.
Oh, okay.
Yes, I did. I'm short on gold now.
Nice jump.
Okay.
So yes, I mean, with liquidity zones, right? I mean, there are different ways you can use it. You can use it for execution. You can use it to identify profit-taking objectives. You can also use liquidity zones to identify areas of interest. And I know that this is something that different people use differently. But I mean, the main thing is knowing two things. Like the two types of liquidity zones. You have your buy-side liquidity, and you have your sell-side liquidity zones. And then, of course, the buy side usually sits at swing highs and swing lows. And then your sell side would usually sit below. No, sorry, buy side will sit above swing highs, and sell side would usually sit below swing lows. And just a general rule of thumb, obviously, like what we're anticipating to take place above buy side is we're anticipating, of course, sell orders to be fulfilled. And what we're anticipating to take place below sell side is we're anticipating buy orders to be fulfilled, just as a general rule of thumb. But that's one way of identifying liquidity zones. Another way to identify liquidity zones is order blocks. So with order blocks, I don't want to go into too much detail about this, but the different ways of identifying order blocks. But personally, the way that I use order blocks, I use it in line with ranges. So you've probably heard James, when James was doing this analysis earlier, you saw him talk about ranges in terms of DXY is currently in a range and is anticipating to trade to the bottom of a range. And as a trader, you have to get really good at identifying when the market is moving in a range. So typically speaking, the way that I would identify an order block is when the market trades outside, shifts and trade outside of a range. And you can see this pretty much on any time frame. So I'll give an example. So we take this initial high, and that was created on gold on Friday, right here. Okay. And then we take this. So price created a high, and then we had a prior low. So this is the prior low after this high. If we then take a box, if I draw a box from that low to this high, this forms a range, right? And this range is a bearish order block, right? So as we can see, this bearish order block forms a key area of liquidity because it's a bearish order block. We're anticipating, again, it's an area for buy-side orders to be fulfilled. So the market would trade into that range, and we're anticipating some sort of a reaction to the downside. Now, within order blocks, you have another liquidity zone called imbalances. So again, an imbalance is the space. So if you look at, for example, when there's a shift candle and the low of the candle prior to the bearish shift and the high of the candle preceding the bearish shift shouldn't touch. If there is a space between the low and the high of both candle, we have what is known as an imbalance, right? And again, with imbalances, you have bullish imbalances, or you have bearish imbalances, and those are also liquidity zones. So those are three ways to identify liquidity: is prior highs, prior lows, bullish order blocks, bearish order blocks, and bullish imbalances, bearish imbalances. Now, in terms of how to use it to improve trade accuracy, for me, the best way to do it is using confluence. So confluence is, I'll give an example. So we take like a trade setup that I took. Let's take the setup that I took this morning, right? So this was still a good trade, just didn't hit my profit targets. So with the kind of confluence I look for is, so number one, if I see that the market has given, like, for example, a shift away from a range, so an area of interest, i.e. an order block, like in this case, right? So this is a bearish order block. So we have this low, we have this high. It's a period. So if we go on to the lower time frame, this is a period of consolidation, market gave a bearish shift, right, creating a bearish order block, right? That's number one. So we can say the market came in and rejected, but that's not enough for me to form an entry idea. The second thing I look for is what else is within this order block that would be an area of sell side liquidity. Well, there is a short-term high right there, right? So I'm like, okay, now I have an order block and I have a short-term high within the order block. So for me, an optimal entry is waiting for price not only to trade into the order block, but to also take out the short-term high. And then I'll be basically looking, so this would be my optimal entry point, right? So at some point when this candle closes and this candle opens would form my optimal entry point, right? So I'm just going to paint that candle red, okay? So this is how you can use liquidity zones, right, to improve trade execution accuracy. Is simply by looking, of course, there's a lot of deeper context into this, but don't just say, oh, I'm going to just take a trade here because it's an order block. So it's like, number one, what is the trend direction? Is the trend direction bullish or bearish? Because if the trend direction is bullish and you're selling at a bearish order block, then you're probably going to get stopped out, and vice versa. Yeah. So you only want to, so bullish order blocks are only relevant in the context of bullish trends, and bearish order blocks are only relevant in the context of a bearish trend. So it's very important that you are trading order blocks within the context of whatever the pre-established trend regime is on that specific time frame. And then, of course, time is also important. Time and price is two things that I always put together. I wouldn't just execute a trade at a random time. So the most optimal points to execute a trade is usually within the first 3 hours of market open. So for me, with Asia, the most optimal time I look for opportunities is anywhere from like 7 a.m. So not from 6 a.m. 6 a.m. for me is like a dead zone, but from 7 a.m. up until around like 10 a.m. That's when I look for a trade. Anytime outside of that is not optimal. So this setup happened at 7:15 New York time.
New York,
so this was a very optimal time. Sorry?
New York time, Eastern time.
Yes, yeah, Eastern time. Sorry, I'm using Eastern time just to make things easy for everyone.
Yeah.
And then another time slot for me as well is London. So the first 3 hours of London open. So in New York time, it's from 2 a.m. up until 5 a.m. London. That's also another time zone that I would identify optimal entries within context. And then for New York, the time that I usually start looking for opportunity is from 8 a.m. up until like 10, 11 a.m. latest is when I would identify optimal entry opportunity for the New York market. So I do find that these times, the likelihood of finding a high or a low that will be respected and where price would rally from that high or low is incredibly high. So so context in terms of trend direction, liquidity zones, utilizing either prior highs, prior lows, imbalances, or order blocks, and then using time to also key into the confluences of your entry. Optimally, the first 3 hours of market open is when you should be looking for your trade entries, because those are usually when you're going to get your inducements, your rallies into prior highs, prior lows, and then after that, you're going to get your dumps. Or if price takes out a key low, you're going to get your rally that could last for the next 4 or 5 hours. But yeah, I hope that answers your question, James. I'm not sure if Richard, you have anything you wanted to add on to that as well.
No, not really. I pretty much just use those fair value gaps that you call something different. Can't remember what you call them.
I call them imbalances.
Imbalances. So we're looking for that sort of imbalances in what price action has been doing, and also using it in combination of just looking at where price is, in relation. Are we ranging, trending, and that sort of thing. So yeah, I think you were probably more, how can I say, expert in that sort of field, which I think you explained well, Walter. I don't know.
Eloquent is the word, Richard. Eloquent.
Yeah, so very eloquently explained.
Much appreciated.
Yeah. And it might be a little bit confusing if you're brand new, or a novice trader, but
sure,
it's a very important, I think, field or technical type of analysis that you need to understand.
Yeah.
Oh, absolutely. Especially if you're going to be a price action trader.
Yeah.
It's a very, very key thing to understand. But I know that Holoprime also planned on releasing like short clips explaining these concepts on their Instagram page as well. So it's incredibly important that you also follow. You guys should also follow the Instagram page for Holoprime as well as the Discord channel, because they will sort of be putting out materials to help you guys understand these concepts a lot better. And I will be recording some materials for you guys as well.
Yeah. I see there's a question. I think we've got to vacate soon, but shall I answer Daniel's question about the German 40?
Oh yeah, of course.
Okay.
I'll stop sharing.
Yeah,
All right, cool.
please do.
How do I get back in? Stops. You got. I don't know what's going on there. You got to stop and then reshare for some reason. Okay. So this is the German 30. There we go. So Daniel. So basically, I think this is pretty simple. We've got a channel here, a pretty neat, well-defined channel, and sorry, give me 1 second. I'm going to let the dog out.
While he's doing that, I got stopped out on the trailing stop after I reduced it midway. So I think I walked away with only $30 to show, but at least not a loss. So not too bad.
Yeah, that's all right. That's okay.
It's Monday after all.
Yeah. So this is the German 30, and it's a pretty simple picture. We've got a long-term channel that we bust out of after trying to hold the top over there and coming back down to the 50 period after many attempts at this top, several over here. First of all, it was a support level. 1, 2, 3, 4, 5, 4 or 5 resistance touches there, and again a couple here, and one there, the most recent one, which we thought I mean we've been trying to sell these channel tops. Most of the time they worked out, including that one, but only got to the 50, and now we've broken out through that channel. Now this is kind of like a blow off top. This channel is a reasonable angle or gradient for a long-term trend, and it's not too steep, it's not too shallow, it's just neat. And but now that we've broken out through it, we're way too steep, and we're right up into incredibly overbought areas. But
if you use sorry, Jannie, if you copy and paste that same channel, keep it the same width on the German 30, just go to the daily, click on the channel itself.
Oh, well, it's not a channel, it's actually 2 lines.
Okay, just or you can just click on one of the lines. Control C, Control V, or just clone it as TV calls it, and I'll go apply it to the top there, which was just before 2022. No, all the way to the top. Yeah, because quite often you'll have the same angles that work for quite a long time. You know, that could potentially be where it's heading, or not necessarily all the time.
Yeah, probably. Actually, you're right, Richard. I mean, that's a reasonable target, isn't it? Right there. What I normally do is
go to that secondary high. That's a lower high, actually, just after that top.
Just after this top.
No, the one that you applied or anchored it to just a while back. That little top there,
yeah. Okay.
If you drag that channel
down a bit,
keep the same angle
like that.
Then that could be like an intermediate target. So
sure. Yeah.
Quite often your previous peaks with market geometry and that sort of stuff, if you're using the same angle, I call the operating angle of an ascent or descent, quite often your internal highs and lows will actually reach the angles of previous highs and lows, if that makes sense.
Sure.
I don't really know how to explain that.
And also, this is pretty equidistant between these 3 lines, and that's another thing that often happens as well. So maybe that is a chop.
Something I've seen, because I mean that's a very strong move upwards, right, for quite some time.
Yeah, well, we've got to find a top somewhere because this market's not going to carry on upwards into oblivion. So it's got to turn around at some point. And that's not a bad point, actually, not a bad area. So let's say we think this might be the top. For Daniel's sake in the chat there, I think there's a chance of this being a top on German 30. We've, all this thrashing around and the reversal pattern there, the big bearish engulfing candles, the wild retracements like we had on Friday, and the top Bollinger Bands there, and that channel that Richard's just pointed out pretty well, very nicely. Thank you, Richard. And I just think it could be a top, but I don't quite trust it. What I'd like to see, Daniel, is another clear daily reversal, at the very least. Maybe an engulfing pattern, another one up, one down, spike high, something like that, whatever. Full stop candle, an island reversal, any number of multitude of reversal candles. And then, but I'd rather see that on a weekly chart, actually, rather than on this daily chart. And if we go to the weekly chart, someone pointed out to me something interesting, which I didn't spot. And this candle from last week is a hanging man candle. And that's actually often a reversal pattern. And after having maybe touched that channel, projected channel line at the top there, and then this hanging man candle could well be a reversal candle. The stipulation for that to be a reversal candle is for us not to close above that candle on a weekly basis. In other words, we shouldn't close above 23,212 on a weekly basis. And in order for that candle to remain intact and valid, and if that does hold, we should see a move back down to the trend line and the 20-week moving average down here, maybe the 50, maybe much further down, maybe down to the bottom of the channel down here. And the 200-week moving average is somewhere down here too. So, or is it miles away? Probably a long way. There it is down there, I think. Yeah, so good observation there, Richard. But I think it's worth watching, Daniel, in the chat for this to be a reversal pattern. Maybe a little wick high with a wick low following it this last week. Could be a reversal pattern. We have to hold beneath last week's candle, not close above it, for this to be validated as a reversal. And that's it.
Cool. I mean, like I mentioned, nothing happened since I traded there. Booked a little bit of profit on a 1-2-1 and then got stopped out on my trailing stop, which I reduced the risk a little bit. So walked away with $30, not much, but I'll take it. We'll pay for dinner tonight.
Yeah, for sure.
Right, guys, I think we're a little bit over. I have to go fetch my son at the other school.
All righty. Thanks, gentlemen.
All right. This was awesome.
I will see you on maybe Friday, maybe Monday. I'm not sure when you're on, but I'm on Friday. So
I'll be on. My next time on is on Thursday, my favorite trading day.
Nice.
Yeah, kind of like Thursday as well. Yeah, I'm on from Monday till Thursday, so I take Friday off. Yeah.
Alrighty.
Cool. Cheers, lads. Have a good one. Thanks everyone for watching.
Awesome. Thanks a lot, guys. Have a wonderful day ahead. All the best.
Till next time. Cheers.
Michael, how you doing? Good to see you.
Hey, you too, Paul. What's going on?
Well, just trying to make sense as always.
All right. I love it. Same here.
Yeah. What's been going on in your neck of the woods? Any good setups today?
Decent one. I'm actually short GC right now. Not the cleanest. I would have liked to see it do one extra thing, but it did set up like per my rules.
Oh, that's good. Not much is clean at the moment.
Positioned.
Yeah, I say not much is clean at the moment. It's all pretty down and dirty trades, really. Not quite where we want them.
Yeah, still got to battle through this whole mess going on in these in this.
What on earth do you mean? Mess? Everything's fine.
Right.
Igor, good to see you. Always like my Mondays with you, my friend. And now we got Michael as well, so it's fantastic. Good combination.
Yes.
Excellent. I have technical problems to log in, so now I'm here. No problem.
Fantastic.
No worries.
Well,
no worries.
Who wants to kick off?
Oh,
Can I
what
start
was that?
with maybe fundamentals a little bit?
Yeah, let's do that. You okay with Igor starting? Yeah? Let's go.
Yeah. Go right ahead.
No problems. I will just a moment.
It's that Monday feeling. Where are we? What are we doing? Where are we going?
Yes. So I will just share to see this week. I hope that you see right now.
I'm sure it's coming.
Just a little bit better here. Do you see?
Not yet, my friend.
It's trying.
Excellent. Okay, so this week will be a little bit interesting. I hope we see right now the movement for the US dollar currency. So what I'm looking for today is, as we know, this poor core retail sales for US dollar. Then we are watching whole this week that I will watch the farm's projections and talking about farm statement. So I just try to collect a lot of information about this. I see few titles like could Trump tariffs cause a recession? So everyone talking about a certain economic backdrop, something like that. And I saw just some important statement that inflation is a type of the thing that would keep the Fed on the sidelines, but the sharp slowdown in growth or rapid of the labor market could prompt the Fed to resume cutting rates. And this message a little bit worry a lot of people around the US dollar. So this week can be very interesting. And just for the beginning, I will share just to see how that looks. Dollar currency, just to show, because something is move. We can see some kind of the move there. I will just show you. Okay. Yeah. So as we can see right now on the daily chart, we saw just US dollar currency is starting to going down. I think maybe to a level 101 and 100. So we see very weak US dollar, and all major currency pairs are in better shape than US dollar right now. We can see the bullish trend for euro dollar, for British pound dollar, for every major currency pair is better than dollar. So I'm watching very strictly everything that's happening right now in the market. But the problem is that I didn't enter into the market because something a little bit not strange, but rare situation happens. And this is the, I will just show you right now for the traders that trade. I will just show what's happened there. We have the opening for British pound dollar, for example, but this is the same for all major currency pairs. We didn't have price manipulation during the UK opening range. So there was no some push to the Asian low, then to go higher. We have very strong push from the early morning in the Asia session to whole day. And I didn't have any good opportunity to enter into the trade today. So I'm waiting and I want to catch some level, but I don't want to hurry because I miss the price. So I just
Right.
want to ask you, how are you in this situation right now?
Michael?
For GU, I am staying away from GU right now. I would need this to do some type of other thing, which would be some type of double top pattern and then a breakdown and a retest of that area. I can actually show it.
Okay, please
grab the
show.
screen really quick. Yeah. So for GU, I will be looking more of a move like, let me get my screen up here. And I'll get into GC here shortly because that's actually, I was just telling Paul, that's what I'm short right now. But for GU, oops. Yeah, GU was really, really high. So I'll be looking for more of something, actually two things, right? I can actually look, I'll be looking for two types of things here. One would be, I can see that for one, I'm already really, really high, right? This is on my 1 hour chart. I see we're trying to break above this little area here. But one, I have my fresh 1350 cross, which is these two EMAs crossing. So I'm to the upside for this, right? I would like to see this run up, right? Maybe a small run up and then a bounce back here, like retesting this area and then running up. And when it tests this area here, I would want this to be happening simultaneously off of this 50 EMA here, right? I'll be interested in a move like that going higher, but to just grab it like that, yeah, I would definitely need some some more interaction here. And simultaneously, right, that is also pretty much retesting this exact area, right? So kind of breaking through this area, little run up, and then retesting this little area of interest here. I'll be interested in something like that. Put my position on maybe somewhere here, you know, put my stops below here and target maybe somewhere like this, right? So I'll be looking for more of a move like this on GU.
Yeah, always confidence, especially at the moment.
Yeah. Yes. Right now, for me, that's in like no man's land. You can't short that. If you were to try to short this is like risky because it could just keep going higher, you know, getting short squeezed. And then secondly, for buying, like it's already kind of taken off. You can't just buy this randomly. You know, I need some type of, again, as I always say, you know, knowing why I'm in the cycle, which I can clearly see it's really high, so I can't just jump in. But two, would be looking for some type of pattern, right? So I would want to see some type of pattern, whether it's just one bounce off of this EMA, right? Or better, if it gave me some type of W structure going long, right? I'll be all into getting in there, stop below here, you know, TP up this point. So something like that for a pattern, right? And then of course I would definitely need which I don't have to worry about at the moment, because for me on my 4 hour time frame, I always want to see price above. For longs, I want to see price above the 13 EMA here, right? Which it already is. So for me, I already have my 4 hour time confirmation, right? So always for me is I always put this, where am I in the cycle? Oops, 1, 2 would be pattern. Whoops. Pattern 3. I don't know why this is so huge. I'm going to make this a little bit shorter. Higher time frame confirmation. I feel like I'm blind. The words are
Make
huge.
it bigger. Just commit.
This is absolutely humongous. I don't know why I have this so large like that.
How far away are you from your screen?
Right. Like, what in the world? This thing is humongous. Okay. Yeah, much better. So yeah, for me, this would be more or less what I'm looking for. So as you guys can see, when I mentioned the higher time frame confirmation, I need to see price above the 13 EMA here, which is the red one, which it is. So I already have that, right? But that last one, right? So I know where I am in a cycle. I will be looking for some type of pattern, as I just mentioned, right? Off of, you got that first 1350 cross. So some type of pattern, probably like this, right? That would be my pattern. And then that entry signal for me would be once price actually closes, because from here, it'll be like below the 13, this will close above the 13, then back below. That last one will be a nice close above this area here, which would be a close above the 13 EMA once again. Stops will be below there, TPs here. This would be a nice setup trade for me at this point, right? But I need to see all of this happen before I'm even semi-interested in even looking at.
Could you switch back to the higher time frame for a moment, my friend? Would you mind doing that?
Yeah.
I think so. There's obviously an issue potentially of, you know, a reversal pattern forming, like just a basic double top, and I think the current candle is going to be the make or break, right? Because if we get that candle body to close kind of where it is or above, then your trades play. But if we have a candle body close below the open of the last one, then it's saying reversal pattern to me. So this candle is very important, right? I mean, do you agree with that?
Yep. I agree 100%. So I'm glad you even brought that up, right? So that was my longer bias, right? For me to continue, because like you just mentioned, price would need to close above this price here, really, for it to continue to look like it's going to go long. Because this could easily, right, come up here, bounce off this, and just kind of fall down, right? And you're done from there, right? So this can easily happen with this double top pattern here. So that's my bias if it were going long. Like, that's what I'll be looking for longs, right? And then for shorts, right? For shorts, I'll be looking for something more along the lines of this, right? So we have this double top pattern. As you guys always remember, right? Like what I trade is market maker structure. So I'm looking for this move like this, right? Retest the area, break below, retest, break below one last time here, and kind of make the W going back the other way, right? So I'm looking for this structure no matter what. So when I say where am I in the structure, this is what I mean. So this, for me, let me back this up just a bit, is that ugly, huge M type of pattern, right? That's the M, that's that top. So I want this to come down, miss the 200 because I don't want it to touch it, right? I want it to come close and break below this area, but I don't want it to touch the 200. And then come back here, retest this area, and then drop. And I'll be interested in this trade, which is this right here, right? So for shorts, this is the pattern I'm pretty much looking for. I want it to make that M pattern and then come back and retest this area right there, right? Break below at this, as I mentioned, the yellow horizontal line, pull, but not touch the 200 because that's very important. For me, when I take this particular trade, I don't want it to touch the 200 because in essence, I like to think of it as I want to ride with the pattern, well, the price towards the 200 for the first time, right? Like I want it to go towards the 200 the very first time. I'm not confident in it touching it, coming back and then going back into it. That's not how my data works. Like from what I've reviewed so far, I want it to touch the first time. So that's why it's important for me for it to break below this area, but not touch the 200 and then pull back and hit this area and retest it and then run to the 200. I'm interested in that move right there. That's actually my highest probability setup. So on the short side, that is what I would be looking for GU. Going short. So that was my long bias. It's my short bias. Obviously, we need to just kind of hang out, see what it does. But if it were to give me one of those two patterns, yeah, I'd be all over that. Super interested.
Yeah. Igor, I know you've got something to talk about the RSI. You've got something to talk about the RSI, right? You must have. I saw it. You saw it too, right? You're going to mention it? I don't know. There's something there. I don't know. Maybe I was dreaming, right? Where's your chart? Show me your chart.
Okay, I will show you something.
We're going to really dig into GBP today.
Right.
Okay. I will show a few charts that I just watching just to share what I think a little bit about everything. So it looks like this, just to see. Can you see it?
Not yet. I'm sure it's coming. Yes.
Yeah, it's coming in.
Okay.
Yeah.
So yes, for example, I draw a relative strength index during the Thursday and Friday on the 30-minute chart. And as you can see, that trend line on the relative strength index on the 30-minute chart, you just hold everything okay. And in the early morning during the Asia session, it was broken. I was sleeping there, so I didn't enter into the trade. And
I hate when that happens.
yes. And for today, for example, I set this 1.2945 level as a bearish bullish validation point. So above this level, I'm bullish for today. And this level as same level as Michael just showed, because if price move to this level and start to go up, it will be, I think, 50 simple moving average. Yes, I think just to show this is a simple 50 simple moving average. So like you said, if we touch this level, we can go higher for today. And like I can check, for example, for today on early session, the CAD is strongest currency, and the US dollar is the weakest one. So US dollar and Japanese yen are very weak, and other a little bit better, as I can see right now. So I'm watching everything. So I'm watching everything right now, because in this moment I need to choose what to trade, because I would like to trade the weakest US dollar and the strongest something. So this is my goal. For example, Aussie dollar is very strong. I already have this long-term trade. As you know, I'm showing this last 2 weeks, and right now we are just going to my special resistance here, and I just like a fan. I just cheer here. So for that, and watching that all the time. But on the other side, for example, US dollar, Japanese yen, we broke relative strength index on the daily chart. But US dollar and Japanese yen, they're so weak, both currencies. So I don't want to mess with this. We are still in a bearish channel. There's no movement, some beautiful movement that I can use to enter into the trade, either to the swing trade. So there's no clue for me. And even on the 30-minute chart, when I draw a relative strength index, for example, for US dollar, Japanese yen, we can see some kind of the bearish bias in the 30-minute chart. Even the US dollar is so weak right now. So I don't like this. So it's not for trading at all. And really, I'm trying to watch everything, but I was surprised by just to add this, surprised by New Zealand dollar, for example. I think it's one of the strongest currencies against the US dollar. And it was a huge push. For example, in 1 hour chart, we saw that even didn't go in a pivot point area here, just miss everything, and just almost all hours are bullish here. We're just going up and up and up, and it's really beautiful who already have some kind of position here. so it's really good, but I think that on a short time frame I will maybe stick to the British pound dollar. like Michael, to wait maybe to go around simple moving average 50 and then to enter into the trade, because I believe that British pound dollar has some kind of the movement, strong volatility, and usually we can see some higher push, either downside, either bullish side. Just I don't like when I see on a slow burning movements like on other currency pairs. So this is the thing that I watching right now. What do you think, Paul?
I think, I mean, it's great to see a currency going up. Well done, New Zealand. It's just everything's just back to front, upside down. I don't know how you're keeping the correlations. It's just, I don't know how you're making sense of it. It's all over the place. Everything. Just, I mean, you look at the chart you were just looking at. I can't remember what it was, but can't remember what it was. But those two candles, which were so extreme, they were just covering a whole range in just two there. And it wasn't that one, was it? No, it was another one before that. But there's just some. I think it was the one before. Forgive me for not logging that. I can't remember which one it was, but it's just, I don't know how you trade it. You know, with these, it's just, no, it's not. It wasn't those ones. Don't worry, I missed it. Yeah, I mean,
a lot of them are like extremes. It's like, for me, it's no man's land. Like, if it's too high or too low, it's like there's no setup really. Like, you can't just buy it or short it. You know, you got to wait for some type of something, and a lot of them are far away from it.
Yeah, and just for everyone listening at home or in your trading stations, every time we say no man's land, have a shot, right? Because we're saying, right? Because everything is in no man's land. That's the thing we're using at the moment.
Yeah, it's beyond difficult to even, like, is it long or short? I have no idea. It's nowhere.
We're trading expert. Yeah, we're trading experts. I have no idea.
Yeah. I have no idea what's going on here.
No man's land, everybody.
Right. Well, cool. I got one going on now. GC. Let me grab the screen here, Igor. And this is kind of going back to, I mean, you guys know I say the same stuff. I do the same things every day. This is literally my same exact setup that I always draw. As I mentioned, it's actually my highest probability setup as well. Yeah, this is looking pretty decent. Not the cleanest setup, I'll be honest, but it did give me everything I needed to actually take it. But it was a little tight, right? I would have preferred the 200 EMA to be down here, like lower, right? So in essence, I have to put, once the 200 price is reached, right? So once price gets to the 200 EMA, I'm gonna go ahead and move my stop loss to break even and just take off some partials, right? Which would be a quarter at this point because I don't have my full position on. I only have half of it on because this area is a little tight. I would have preferred for the 200 to have been like somewhere down here, right? Not all the way up here because it just makes it pretty tight, right? Because technically my TP is here. I would have preferred my TP to be before the 200 EMA and it's afterwards. So when something like this happens, whoops, I didn't mean to take that off. Dang it. Let me see what price I'm in. I think I'm in at 81. So let me put this back at 81. 81. So about right here, right? And then I'm going, I don't even like to really do one for ones. They're like that's like the very minimum that I'll take. But this is, again, one of my highest probability setups, right? So as I always like to mark up, I have 5 setups in my playbook, right? One is my master trade, which is this exact one that we're looking at, and I'll break it down in a second. Combo trade. 3 is my ID 50 trade, which happens on a 15-minute. 4 is my M or W off the 200, and then 5 is what I call my money trade, right? So my master trade is A+ setup, right? This is a A as well. This is actually a B. This is a B. And then this one is called a C. This is my C setup, right? So anytime I have my master trade setup, even though this is typically I would put my full position on this at 1%. But when it's a little tight, the way this one is between these EMAs, I'm not as confident in it. So I just tend to scale down a bit. So I'm only in at a half on this particular one. But any other time, if this actually had enough room to run, this would be my full position type of trade here. All right, so just like I keep pointing out here, I'm actually going to erase this to make this a little, actually, I'll just move it over. I'll move this over here, right? So, and then as you guys see, I always draw this same markup, right? So I can know where I am in the structure here. All right. So again, I'm only interested in 2 of these areas, as I always say. One is here. I'm sorry, I'm not interested in 2 of these areas. These 2 areas I am not interested in. These 2 areas have literally given me sleepless nights.
Yeah, the money is made in the middle.
Peak.
Always in the middle.
Right. You gotta learn to let these go, because this is not going to work out the way you think it is.
Yeah.
Right. So I'm not interested in either one of these peaks. I am only interested in these 2 specific areas. Right here, when it retests this area, right? And then here, when it retests this area. So for me, this is after the peak, the next thing you have is level 1. All right, so this is let's put an arrow here. This is my level 1 trade, right? And then 2, level 2 trade. So I'm only interested literally in these 2 areas. So when I'm looking through all my pairs, I'm looking to see, as I always say, one is where am I in this cycle, right? So when I see something like this, right, coming out of this peak area, right, I can tell that this is the peak, which I'm staying away from. But my next prediction, seeing that I know where I am in the cycle, right? As soon as I see this 1350 cross here, which is the 50 EMA and a 13 EMA, my next move is to see them break this area, which they did. As I mentioned on the last one, we were talking about GU, to miss the 200, because I don't want it to touch it. If it touches it, it's a pass for me, right? I don't want it to touch it. I want it to be the first time that price goes to the 200. So miss the 200, pull back to the 50 EMA, which is the very first pullback after the 1350 has crossed, and then drop towards the 200. That's my move that I'm waiting on, that I'm looking for. This is once again, my A+ setup, guys. Like, this is it. This is my favorite trade to see. This is the easiest trade for me to see. This, when I journal my trades and look at the data, this is my highest probability setup. The whole 9 is right here where this is made, right? I'm not trying to catch this peak. I just want to break through, retest this area, and I'm short in this particular scenario, right? This same thing could happen, obviously, the other way around, which will make it long. But in this particular scenario, that is what I'm looking for, right?
Yeah, that's really good.
Level 1 on here is the same exact thing as this. Coming out of the peak, 1350 cross, slight run, pull back, retest the area, first touch to the 50, drop towards the 200. That is my bread and butter trade. I can see this with my eyes closed.
Okay. Can I ask you a question for the benefit of everybody else?
Yeah.
How having these very good predefined setups and structures, inside and out. How do you? I mean, I know the answer, but how does that improve and aid the psychology of trading for you? Do you know what I'm getting at?
Yeah. So for me, it is night and day, right? Like, it's almost, I always use this analogy of, I know where I'm going, right? So if I know where I'm going for the most part, I don't have to really worry about if I'm going the right way, right? Like kind of like in a car, if you've never been to a location, you know, someone gives you instructions, or typically nowadays they give you the exact address and you put it in your GPS. That's how we find it, right? But before, it was a bit more difficult. Like, remember the MapQuest days where, you know, someone would say, you know, hey, when you get off the expressway, you know, at number 20 expressway, make your first left, go down about 10 streets, make that right, go down another 4 streets, you'll see a big red barn, you know, make the right at the barn.
You got the pot golds in the barn, right? Yeah.
It's like, I can find where you are, but that's a bit difficult. Like, right? Like landmarks, because the whole time you're wondering, like, wait, did I pass the barn? Is it still coming up? And you have that sense of apprehension, like, wait, am I going the right way? And you're just kind of nervous, right? Like, you're really just, man, I hope I didn't pass it. You know, you might be running late, traffic might be there. So
yeah, and when you're nervous, and you're not quite sure, you make mistakes.
Yep. And then it's like, look, they tell you, hey, if you went into the Waffle House, then you went too far, right? Next thing you know, you see the Waffle House, like, I went too far, and I got to turn around, right? The landmarks, they do it, but not really. Like, it's not as good as an actual GPS location, right? So that analogy, as opposed to, hey, I gave you the exact address, you punch it in your GPS, you get in your car. Now you can cut the music up. You're not worried about if you passed it. The Siri voice or whatever app you're using tells you, hey, you're going to make a right, and you know, at this intersection, whatever the case may be. And you're not worried about it at all. Like, you can easily, you know, consciously know exactly where you are and what you need to do. That is these two scenarios, right? So to answer your question, knowing where you are in this whole cycle is, I have the GPS location to where I'm going versus I don't know where I'm at and I'm just trying to rely on landmarks and hope I didn't pass it, right? Night and day. So for the psyche, I'm not worried about, I'm not apprehensive, I'm not anything. I got my music up, Bob Malone. You know, it's a huge difference. So I always try to stress as much as I can, you want to know where you are, right? Like, that's why, as I pointed out earlier today, the number one thing for me is, where am I in the cycle?
Yeah. And if you don't know where you are, or you recognize you're in no man's land, then
literally
no trade, right? So brilliant.
Yes. If I don't know where I am, I'm not getting in the car to drive anywhere. I don't know where I'm going. I don't know where I am. Like, I have no information at all. I'm not a person to get in the car and just drive aimlessly and hope I stumble upon it. Like, no, that's the furthest from a smart thing to do for me. Like,
good metaphor.
Right. So, but yeah, so everybody listening, you definitely have to know where you are, right? Like, in this cycle. And again, it's just one of the million ways to skin this cat, right? To take profits out of the market. But it does all start with knowing where you are, because with this information, guys, I'm not taking any longs at all, right? I know where I am. I'm coming out of the peak, right? Short, and it's retesting level 1. Even if level 1 passes and it breaks that area and it comes out and it retests level 2, I know I'm still short. There's no way on earth that I would buy any of this with a structure like this. Why? Because I know where I'm at. I'm short. I'm not long at all.
Yeah, so because they're sell cycles.
Right. You know, like, now if this were the other way around, right? So say this, I'm gonna do it this way. I'll just do this, right? So that's one scenario, going shorts. I'm always short on this side because those are my levels. Now, same thing would just be the other way around, right? Break this area, come retest it, break this area, retest. The same exact thing, is just inadvertent, right? That's the word. Right. So these once again, I'm only interested in these two particular areas going long at this point. There's no way ever that I would take a short in here. It's the wrong way.
Yeah.
Right. So same exact thing again. All right. Got the peak. Oh, whoops. Whoa, why is this happening? Okay. I swear TradingView has a mind of its own sometimes. I'm like, what is happening?
That's very true.
Right. So level 1 once again, and level 2. I'm only interested, as I keep saying, I want to drill this into everyone's mind, in these two particular setups. That's it. I'm only taking shorts on this side when I have a peak. I'm retesting the peak over here and retesting level 1 over here. And same thing on this side. I'm only buying on these particular sides. So when I'm going through all my pairs every day, I'm only looking for one, as I said, where am I in the cycle, right? And once I can identify where I am, if I'm in level 1 or level 2, oh yeah, now we're looking for the next step, which will be that pattern, right? Now I want to see that pattern happening, right? If I got a nice pattern off the 200 or the 50 EMA, whichever setup I'm actually taking, then okay, now we got some action. Next thing I want to see is that higher time frame confirmation, right? After that, then I need to see that entry signal, right? Which would be, for me, a close above the 13 or below, depending on which direction I'm going. But yeah, to explain it all, this is everything I'm looking for every single day. If I'm in peak high or peak low, how we looked at GU, I'm just not interested in it at all. I need a lot more than that. Like that doesn't show me anything. It just shows me, yeah, it's a great chance that you're going to get stopped out if you try to jump in randomly here, right? So, but yeah, this is, again, bread and butter for me. As long as I can identify, hey, I'm in level 1, I'm looking for that bounce, the very first pullback to the 50 EMA coming out of level 1, right? Or on the next one, my next setup would be, once level 1 trade has already happened, which for me would be the master trade. Once this has happened and I'm in level 2, which signifies that I'm in level 2, is the 5,200 will we have crossed at this point, right? So let me try to add some context to this. All right, so 1350 cross. Oops, 1350 cross. Right, so this is how I know I'm in level 1. If this happens, the 1350 would cross, and then for level 2, all right, the 5,200 would have crossed. Right, and that's it. So if I have a 1350 cross, how I am now coming out of level 1 short, I'm all over that. I got my fresh 1350 cross, missed the 200 EMA, first pullback to the 50. I'm all over it. As soon as price closes below the 13, right? And then after that happened, the next thing I'm looking for is for the 50, which is the blue one, and the 200, which is the white one, for those to cross. And then I'm looking for some type of M or W pattern off that 200 EMA, going long or short, depending on where we are in the cycle. And once that move happens, that's it. I'm no longer interested in anything in that cycle. It has to start over for me to be, interested in it once again. But yeah, for the majority of the time, as I go through the pairs, because it's quite a bit here, right? Starting at NASDAQ, first few indices, gold, silver, crude oil, Bitcoin. The peso, I don't trade that actively. I just look at it because I live here in Mexico, so I like to see the exchange rate. But everything from there, all my euro pairs, GBP, USD, I'm just going through all of these every day, finding out where I'm in the cycle. Hopefully I'm in level 1 or level 2. If I'm not in level 1 or level 2 in any of those, it's no trading day for me. That's it. I'm done. I'm going to do something else.
I mean, and I think that's some people glancing at this would be like, okay, so I buy the breakout of the bottom level, and I go to buy the retest, and then I wait for the next level. But no, you're obviously have additional triggers you need before you're entering.
For sure. For sure.
And that's the important thing to say here, that obviously you're not trusting the pattern. you're getting validation that the pattern is most likely going to occur before you enter. And I think this is a mistake a lot of beginner traders make. They'll follow a cipher or whatever way they're doing, or just basic price movement, and they'll just be like, well, this usually does it. It's a retest, so buyers are going to show up. You need that confluence. You need something to cross or something underneath. So yeah, that's fantastic.
Yeah, no, touching on your point, right? It's like, oh, this is, when you say this is close enough. Oh, close enough isn't enough in this bracket. It's just not enough. You need much more. This is a very high level overview, right? But in essence, this is what I'm looking for. I want to know where I am, see a pattern, higher time frame confirmation, and an entry signal, right? But within this, yes, there's definitely, I'm going to go ahead and take all of this off here. I'll give a quick moment to screenshot this if anybody wants to screenshot this.
Don't waste all that effort.
All right, I'm going to copy this actually. Just going to copy it. Yeah, I'll copy this and then I will put this. Oh, I can't even put it in the comments. All right, I'll try to put this here. All right, just for later. But yeah, I will take all of this off. Now, once I have this confirmation, well, all of those things lined up, a few things do have to happen, right? So case in point, this trade actually confirmed on this candle because, as I mentioned, once my 1350 crosses, the very next thing I'm looking for is the price to pull down, but again, missed the 200, which it did. It never touched the 200 EMA. That first pullback to the 50, which is right here, right? Now, next in between this, I also want to see the confirmation for me is for price to close below the 13, which this candle did, right? This one was close. This candle was close, but as you see, it's above the 13 EMA. So this doesn't count. Yes, at one point it was below it, right? So I couldn't take this on the 8 o'clock hour, right? Because it didn't close. And this is the importance of actually waiting for confirmation, because although the next candle did close below it, this could have easily, once this closed, just went the other way and it would have been a no trade, right? So if you would have hopped in early, you would have got stopped out. Basically, right? So super important that you actually do get that confluence and that confirmation. But in this particular example, even though price had closed here, I couldn't just jump right in it, right? Because, right, price closed here, my stop goes above this last swing point, right? So over here, and then I want price to basically minimum 1 for 1, right? But if you look at this, I'm risking 60 cents. I'm earning 60 cents to make $1, right? So I would have to put this all the way down here for a full 1 for 1. Not the best, right? So what I will be waiting for is a pullback, right? In this particular example, I said I'm in at 81, so I guess I got slipped. But either way, I will be more or less looking for a nice pullback to this 13 EMA to give me just a little bit more space to breathe and for it to run, right? So that's what I'm looking for on the chart. And additionally on the TDI, guys, which is my bottom here. So I got the chart at the top and I have the TDI at the bottom, right? I'm looking for just a few little confirmations here. We got this fresh market baseline cross. Market baseline cross below the static. This dashed line is the static line. The yellow one is the market baseline. So once this starts going down, right, how this is below this now, I'm short. I'm short. This is giving me extra confluence that, hey, this thing is going good. Had the market baseline still been above the static and this happened, this will be a pass because the chart and the TDI are disagreeing with one another. And for me, I need them both to say the same thing, right? Yeah. So this is giving me that extra confirmation as well. And then lastly, just to close it all out, is the last thing I need for this to happen is my RSI line, which is this purple looking one, and this signal line, which is this pink or reddish one, depending on what you guys see. This needs to be above the yellow one, which is the market baseline, which it is, right? When I take this, this trade confirmed at this particular point, The red one and the purple one were above the market baseline. So we're good to go. The last thing we're waiting for is that close below the 13, and I'm all over it. Like all over it. So yeah, high level view, that's basically what I'm looking at, but there's definitely some extra confirmations that needs to happen for me to actually take it. I'm not just taking the trade because it retested.
Super helpful. Super helpful.
Yeah. So yeah, we're looking pretty good on this one. Like I said, I'm in at 81. It's at 64. I got a few accounts connected, so it's over like 1 million in like prop firm capital. So when I take these setups, they literally have to give me everything I need, because even at risking, you know, 0.5% like today, this is still a $5,000 move. If I'm wrong, that's $5K down the drain, you know. So got to make sure these are done the right way. I don't take many trades throughout the week. I'm literally taking 1, maybe 2, max probably 3 setups in a week, because as you guys see, there's just so much confluence that needs to happen for me to actually engage in the market. And if it's not, I'm cash. I'm just
as well. I mean, there's another thing which beginner traders do is stay overtrade. And once you have a plan in place, you'll realize that your plan really dictates how often you trade, not your emotions. And I think, again, everything you're demonstrating here is just demonstrating fantastic practice. So just brilliant.
Yes. This comes from a lot of losing, right?
The trader's tuition, as they say.
Yeah. So cool. But yeah, I'll let one of you guys grab it and kind of see what you got next. What you think about all that, Igor?
This is beautiful. I like when we have algorithm. I like algorithms. So in my life, it's very important. So you really have a good algorithm, and just keep that. I will always add a little bit fundamentals, just for protection expectation. For example, I didn't tell today, for example, one very important thing. After the FOMs that we will have in Wednesday, 3-4 hours after that, we will have announcement, for example, for New Zealand dollar. And they expect the GDP was minus 1%, and it will be, I think, 0.4% right now. So it will be much, much better results. And I think that this push of New Zealand dollar is because of that. And I think always we can find some impact that can be really, really big for some currency. And I think if we add that as additional trigger, for example, we have 4 or 5 triggers and everything aligned, it's an A setup. Really, it's an A setup with everything aligned. And this is the joyful.
Exactly. That's the part where it all starts to make sense.
Yes.
For me, I don't trade news at all, so I didn't add this as well. But the very first thing that I do is just how you looked at Forex Factory. If there's any type of red folder news, I am not in the market, right? So if we have news at, let's say, 10, I'm not taking trades before 10. If we have news at 8:30, I'm not taking trades until 9. Like, I literally avoid the news like the plague, because that is part of my process as well. I've been stopped out countless times for ignoring that, right? So that's the very, very, very first thing that I do. In fact, on Sundays, I actually do a projection of what's the best days with no news or little news, or what days I probably just want to, be careful, because let's say news might happen at 10:30, 11. For me, that's really late in the day, because I don't really trade currencies after 12. I only trade like indices after 12, but on those days, for me, it's more of I'm probably staying out of the market, because it's just news is happening just way too late, and the opportunity is just so short, right? Like, if news is at 10:30, I'm not taking trades until 11, but I'm not taking trades till after 12. That's too tight of a time frame, so I just tend to stay away from it altogether. But yeah, definitely that's the very first thing I look at every single day.
It is pretty different in crypto. We have a saying that we buy the rumor, sell the news. And obviously, in the context of crypto, when you have like specific projects, let's just say, I don't know, Bitcoin Cash, when it was originally launched, and they were saying that their mainnet launch is going to be on this date, then you'll see a lot of people buying it. But then when it actually gets to the launch, it's a sell-off, because and that's the negotiation in crypto. It's, so it's very different. Igor, do you mind if I check in with Bitcoin? So at least that's done.
Yeah. Go right ahead. Please do.
I honestly, I've been trying not to look at it today because I thought we'll just be surprised in the moment, right? So, right, okay, where are we? Right, so this is, can you see that okay, guys?
Yeah, it's in.
All right, so when you're looking at any instrument or any asset, there's always, you're not going to look at it in the same way on any given day or any given week, right? There's certain times you're going to be transfixed on the daily or the weekly because you're waiting for a specific candle body close or something. But when the price action is just really all happening on like the hourly or like the minor trend or the intermediate trend, then that's where we need to focus. So we don't really need to zoom out today. We had on Friday we had this breakout. I'll zoom in of this ascending triangle. Now this is obviously a bullish, has a slightly bullish bias because we've got a uptrend essentially, and then the sellers are just being attacked every time it hits resistance. So you do expect a breakout, but obviously we have the 1 day 200 MA acting as very strong resistance as well. But as this got closer and closer and closer to this resistance line, it was easier for the buyers to overcome the sellers, and then we had this confirmed candle body close, on the hourly chart, first the 30-minute, and then I wanted to wait for the hourly. And then people will then start to try and buy what we call the breakout. Now, in current conditions, what that basically means is that you wait for the breakout to occur and you have proper confirmation. And just as Michael was just talking, we come back down and we just try and jump in at the flip from resistance to support. But the reason why I wanted to talk about Bitcoin today is because we can have a bit of a lesson in this. Because how do you spot a breakout, which is essentially a fake out? Because this happens in crypto all the time. So we had this candle body close. So buyers are starting to come in. Now you'll see a lot of people try to enter on the 200 MA. This is the 1 day 200 MA stuck to this time frame. Just for context, it's the 1 day 200 MA. So It's got a lot of support. And you saw buyers come in, but then they obviously can't. They're struggling to fight against the sellers, you see, and then we lose it. But how do you trade this? Well, the first thing is, if you see this breakout, you'll notice this next candle, this is hourly, came right back down into the pattern, even though above the 200 MA. That is your first warning sign that there's a problem. Plus the fact that we're cooking on the RSI, we're oversold, and we've also got a break back in. So that tells you that this breakout may not be able to hold its own and carry on upwards into this range. And that is exactly what happened. You'll notice we didn't ever manage to pass the swing high, and then we come back down. There's still buyers. It's still a 200 MA. So we still got a bit of a battle, but then the sellers start taking control. And then once we lose the 200 MA again, we're down. We're still fighting, but now we're back underneath the pattern again. So if you're trying to trade that breakout, you need to look very carefully, not just at volume, which volume was pretty good. You also need to assess the other indicators to suggest, is there enough buyers going to push it up? So we're oversold in the stock, we're oversold in the RSI, which is giving us signals that maybe there's not enough legs. Plus, we're struggling to find a foundation on this trend line, maybe because of the ambiguity of these two support lines. But ultimately, if you had seen that, then you're not going to attempt to buy the retest, and you may have switched to a essentially the safest way to buy the breakout, which is to wait for the break of the swing high. But again, if you had done that, you'd be in no man's land. So, and here we are now, we're back in the pattern. So is this going to be now a short trade? Well, let's have a look. Let's try and figure out what's going on, right? Is there a pattern we can trade off? Is there any lines in the sand? Yeah, maybe. It's not particularly great. It's just in the process of forming. This is my process. I'm going to have a look at what the order blocks are. Right. So other people are thinking that we could get a bounce here, right? Because this is a bullish pattern. It's just struggled to break above, but maybe on the next attempt. But you can see there's a lot of orders. So there's an idea here for not waiting to come in here, but let's see what the moving averages are doing. We've got the 200 MA. let's put the moving average for the hourly on, right? And here we go. Right. So we got this, just like you saw, Mike, we've got this squeeze, right? Really interesting squeeze. And this is why this order block has essentially appeared, because we've got this swooping down of this. This is a 1 hour 200 MA. So how do we trade this? I'm not really convinced there's going to be a short trade here yet, because we're above this. So again, whatever time frame you're looking at, this is the hourly. This could be a line in the sand. The breakdown of this pattern could be your entrance for a short trade, because we've got this lovely confluence. Because if we have a break of the 200 MA on the 1 hour, and we have a break of this lower trend line, which we'll be able to look at better at smaller time frames, then that gives us, again, a bit of confidence to enter. But I'm not convinced that that's the trade. So really, still, for me, it's a buy the breakout trade. You want to wait till we have another attempt at breaking above this, and then again, try and come in if the conditions give us slightly better signals than this. And that means really maybe a stronger move up here, higher level, more height, breaking this previous high, and then probably you'll find that this will offer a better foundation, especially because this 1 day 200 MA is now even tighter and closer. So there we go. Sellers are still in control, but maybe we have to see what happens next. But definitely short trade, we're gonna need some more confirmation. But still, I don't want to say it, but we are in that place. So yeah, that's where we are. Anything to add?
Yes, you're absolutely right. I just got the idea to show something, because false things that I will just show what. Just a moment. Okay. For example, I hope that you will see right now. Yes, you see.
Yeah, coming in. Yeah, we can see it.
So this is the Kiwi dollar, and I just want to tell beginner traders to watch something that's very important. Right now, I'm watching 1 hour chart, and the relative strength index is 88. And I know a lot of strategists on YouTube or around the internet, and they just want to tell you, okay, you are overbought right now, you should sell. And I know you're laughing because you have experience in this, but people think, okay, if it's 70, it's overbought. If it's 80, wow, and if it's 88, I should sell. And they're sure for that. But I just want to show you the same exact pattern.
It's like it's written in the trader's Bible or something that this is grammatically correct. Like you have to do it. Like no. This thing could still kill you right now.
Yes, and for example, I remember this month it was the very similar situation there. Yeah, it was the March 5. The same thing. So we were at level 78. We were overbought in New Zealand dollar. And from that moment, relative strength index started to go down. There's no problem with that. But the price, 24 hours later, touched the high. So we had a high 24 hours after that. So a lot of traders lose money in that position. Either just try to sell on the high overbought relative strength index. Even the relative strength index is falling down right now. Price can go higher and higher. And this is something that it's really the traders need to think about that. And I think that this Michael's strategy that avoiding to trade on peaks, when really peaks, either higher highs, either lower lows. So it's a very, very good strategy, because if I'm bullish, I should buy. If I'm bearish, I should sell. And that will give me some kind of confidence in trading. And I will avoid a lot of stupid decisions, because a lot of times when I see that breakouts, a feeling that I'm on the top, I can try to sell, but it's really problematic. So I just want to share with you. Just say that.
It's because, I mean, when you're trying to buy breakout of patterns, of course, right? You really want to, when you know where the RSI can give you an insight to a degree, right? So is there enough headroom to push this upwards, right? But you've also got to appreciate that if the RSI has been forced into such an extreme oversold state, that is a bullish signal in itself because it's showing health in the market, right? And the RSI can just stay in the upper zone for a while. I mean, that's why we have the stock, right? So we have something else to trade when it's doing that. But talking of like Bitcoin and breakouts, you know, you really ideally want to see, you know, you want to see a cooler RSI because you want to see that. We're not saying below the 45, but maybe something around that area, just as the price action is trying to break out, because then it's got a lot of headroom to go. And buyers who are sweeping in to buy the retest after a breakout, you know, they're like, well, the RSI is not oversold, so, you know, which is a traditional bearish signal. But as we know, there's many ways to, as we're just laughing about, there's many ways to interpret the information we're getting. So yeah, it's learning how to interpret these signals. And like with the other chart, you know, you were essentially describing divergence when the RSI was going down and the price action was still going up. And there was a student I had today which was asking me, why did this setup fail? And there's a couple of reasons. Really good, gonna be a really good trader. And I said, well, look what happened, right? You know, you have this divergence, this very long divergence on the RSI as the price action is going up and the RSI is going down very steadily. And that's just that. In that case, it was hidden bullish divergence, which means continuation, right? So sometimes the RSI, when you see it break lower below the 70, you know, there's a bearish signal you can trade off. But other times the context will tell you that actually this is just a healthy bounce, because, like, you know, you draw trend lines on all the time, Igor, right? And it's to make sense of the signals we're getting. So super helpful. Yeah.
Right. Right. Like you said, this doesn't just mean automatically short it just because it's oversold.
No, I mean, you want a bit of divergence. You want something. You want something, or a long-term resistance line which hasn't been touched for a few weeks, right? Where there's going to be a lot of sellers congregate. You need something. You can't just be like, because you have people. I do know people who just trade the RSI, and it's like, I'm not quite sure how they manage it, right? And I don't think they do, because you can practice it and you can be like, you can draw your price chart and say, well, it was oversold if I'd bought here. It would, then I sold here. But the reality is, if you look at it closely, you've got like loads of different dips and peaks of the RSI before reversal. And how do you know that another dip's coming? It's like, you can't rely on it just as a single entity to trade off, for sure.
For sure.
Yes, and there is one catch that people need to think a little bit. It's about a trend. For example, we can have a trend like this. Every single candle is bullish. So there's no lags here. So everything is completely bullish. Sometimes we will have with lags, you know, 40 pips up, 20 pips down, 40 pips up, 20 pips down. And sometimes we can have one big bullish candle, one big bearish candle, and we can be in range or something like that. So sometimes it's very important to recognize the type of the trend and thinking a little bit about that, because it's maybe all three scenarios can be bullish, but there are three completely different bullish trends. So just a thought about that.
Yeah, no, it's important. Can I talk about the money flow for a minute?
Yes, please.
I think we've lost somebody. Michael's left us. What is happening?
Yes,
Michael, come back.
He doesn't like bullish fans.
No, I didn't mean to offend him talking about the RSI. I mean, I didn't mean to offend you. We won't talk about the RSI anymore.
No RSI anymore.
I'm out of here.
All right. So look, this is I like to just use the week to kind of just assess where we are, and I think there's a lot's been happening. And this is can you see this okay, guys?
Yeah.
All right. So this is total 3 paired with Bitcoin. So essentially, when this is going up, it means the altcoin market is thriving. And this was, as an example, the previous bull run leg, which from January to May 2021, which made loads of people loads of money. Now, this is where we are. We've had the bear market, and Bitcoin is up here doing its thing, but the rest of the altcoin market isn't doing anything. Now, just to make clear, this doesn't include Ethereum, all right? Because total 2 is with Ethereum, total 3 is without, because it's quite big, and it can mix the signals. So what we're seeing here is kind of, we've got this change of character here, where we've had this great move, and this was kind of after the election. And what this is obviously our first, on a simple way, it's our first kind of sign that the trend is going to change. And obviously, because this is a 3-day chart, this is happening in slow motion. But there's something called a fake change of character, or fake shock. And what it essentially means is that you see these when there is the process of change between a downtrend and an uptrend. And this is quite typical. So you'll get this really good bullish signal, right? Essentially a change of character, a higher high for all intents and purposes. But then you get this massive liquidity hunt while the trend is changing, because, you know, and then it comes down. And then what we should expect now is the new uptrend to start forming properly. It's a pretty classic sort of pattern. Now, this is the altcoin market. If you're thinking of Litecoin, Bitcoin Cash, and you're trying to capitalize on the big moves which they haven't made yet, keeping your eye on the money flow and where it's going can give you a bit of an insight. So obviously, all the altcoins reach up here. That's a significant increase in market cap, and this is what people should be paying attention to right now. As you can tell, we're on the floor. Bitcoin is outpacing the rest of the altcoin market, and this is ultimately what we want to see. But I think we might be starting to see this. So if I switch to Bitcoin dominance, all last week, this is just the 2-hour chart. All last week, we were talking about this trend and trying to break down out of this area, and that would essentially allow for good altcoin movement. That'll let Bitcoin Cash, that'll let Litecoin, that'll let Ethereum do its thing. So at the end of last week, we had this lower high, which first gave us the first signal that we may be having a breakdown. And of course, there's a bit of a battle, but now we have broken down. We're below this zone, we're below the 382, and all we need to see now is another lower low and another lower high, and this might equal improved altcoin trading. And let's just see what Litecoin is doing. Yeah, as you can see, you know, it's knocking on the door of the next level as a result of the money flow being in its favor. We're now kind of starting to move in an uptrend, and this is because other traders have seen Bitcoin finally trying to break above the 1-day 2MA after lots of bearish news, and then the money flow starts to reflect that as people begin entering their positions again, and the altcoin market grows, essentially moving Bitcoin dominance down. So this is what we're going to be watching this week. This is what we're going to be talking about. And also, the other thing we can look at is USDT dominance. And this essentially means when it's going up, it means that people are not entering positions, because USDT is essentially what with just basic spot trading. You're using it as your capital, your digital dollar, essentially. And then you enter a position. And when everyone enters a position, USD dominance goes down because they've invested in Ethereum or Litecoin or Bitcoin Cash. So right now we're at resistance. We haven't had a candle body close above here. Well, we did actually have a little one. That was a little bit scary. And we're just trying to come back down and invalidate this pattern. So when you basically see this coming down, this is really basic stuff, right? This just means that people are beginning to enter their positions in the altcoin market. And talking of confluence, for me, these are my confluence signals, right? I need to see this entering a downtrend or a macro downtrend, and that's good for medium-term longs. And then I want to see it reflected in terms of the market cap of altcoins. And then you use these two things in combination with an assessment of Bitcoin, that will then allow you to trade these. So that's kind of where we are. We're hoping to see some movement now. We're hoping to see some of the altcoins recover a little bit. See, they are. We're now in a macro uptrend. But that's kind of the state of the market at the moment. I just wanted to touch base with that, and we'll talk about it more later in the week. But guys, anything to add about that?
Yeah, this chart right here, for me, This looks gorgeous for longs, like, right? How I always draw that market structure when I say that W, and then it breaks past and it pulls back to around the 50 EMA and retests this breakthrough area. This is it right here. You even have a beautiful W pattern right here, right? Like right on the hard right edge where it is right now. You can get a decent close above this little area, like little support area. This for me is a great setup going long to retest those highs at the top.
And in crypto, this is what gives you the edge, right? If you see that like total 3 is in a downtrend, even if you zoom into if you zoom in now and just have a quick look to the hourly chart, right? And you're doing it maybe an intraday trade or something, right? You need something to trade off, and you can look at what trend we're in. And right now we're ranging, of course, we're indecision, because why is there indecision? Well, it's because Bitcoin is giving us indecision. It can't find its way above here yet. So that's reflected in the market. And here's another perspective. So this is total 3 index, not compared to Bitcoin. And you can see, we are making progress. This is the previous bull run. And we're at key support, essentially. We're in the key support zone. All the altcoins have reset, essentially, since we've had this initial breakout in November following the election. This was when Bitcoin broke all-time highs. But unlike Bitcoin, which has broken its bull run top, the altcoins are nowhere near. And this is what's happening at the moment with the economy and everything, because the risk assets are the last things to move when there's uncertainty. So chart these things if you're trading crypto, chart them, see where they are, use them to your advantage. Because when you start seeing a trend change, that's your signal to enter long-term longs. And if you're doing intraday trades, just zoom in, figure out what the trend is, and then trade it. It's as simple as that. So I'm hoping we're going to see a bounce soon over the next few weeks, as long as we can get stability, and then altcoins just start to move, and they should follow Bitcoin. So that's kind of where we are, I think.
Nice. No, I agree with all of that. That was awesome. I'm right. This GC trade is doing pretty good. I'll go ahead and grab the screen here just to kind of give a little bit of extra insight of what I do at this point, right? So this is actually going great, right? So typically I would have taken partials off of here already once it touches the 200, because as I keep saying, guys, I want to be with price the first time it goes to the 200, right? Because once I get this 5,200 cross here and price comes down and it touches it, the 200 already, and pulls back and then goes again, I'm not really interested in that move. Like, I really don't want it to touch right here a second like the first time, right? I wanted to just do it exactly what it did, which is miss it. Because for me, like on this particular setup, the 200 is kind of like a magnet, like it's pulling price towards it, right? So when it does that and it misses it and pulls back, this move here is golden. Like, this is a golden move, because you got all of this area that is basically coming back to retest, right? This whole area here, and just riding the wave with the trend, right, towards the 200 EMA for the first time. Like, this is golden. So, and once again, as I always draw this. This is really ugly, but this is that exact move, right? Going lower and lower. Now, this is a bit tight, as I was mentioning earlier. So that's why I had to wait for the pullback, which sometimes, as you guys already know, it won't give you the pullback, right? But you got to get the pullback for the R to make sense. Because had I not done that, I wouldn't have gotten a decent position like I got. So I'm in at 81, right? And again, typically I would be not taking the full order off, but I would be looking to really start making decisions once it touches the 200 already. But this is a little bit tight, right? In this particular scenario, I'm just looking to take some partials off, not really close the full position. Oh, whoops. And I would be letting this ride for the rest of the day, right? Only until, though, 355, right? Like I day trade, so I don't hold positions over to the next day, which would be Asia. I don't want to risk that them widening the spread, taking me out at break even. I don't want to pay any swap. I don't want to do any of that. So for me, I always close my trades at about 3:55. So if 4 o'clock is here. Oh, yeah. Okay, cool. I'm gonna say, wait, what's going on here? So we are here now at 12. 1, 2. Right. So somewhere over here around 3:55 is what I'll be interested in taking this completely off. I don't care if the price is all the way down here. I'm still just going to close it no matter what at 3:55. And this is how I would manage my position. Right. So case in point, when as this goes further and further and further into profit, right, I might have like my stop loss here. And as they keep going, I might just move it a little bit further and further. I'm just going to trail my stop above the most recent swing because I don't want price to come back and take me out, and I wasn't really ready yet. So I'm always just trailing it above that most recent swing, right? So in this case, I would be at break even already on this. So if this did, because for me, once price touches this 200 EMA here, it could easily come and bounce off, right? And then continue to go the other way or something. So no matter what, I would always move my stop loss to break even once it gets to this area, because this is in essence, my next area where price could potentially bounce off of. And once it gets to this area, I don't want any more risk on the table. Just please take me out all the way, take all my risk off the table. And like I said, I'll typically just be looking to trail it and take some partials off just so I can, for one, get paid for the day. 2, take that risk off the table so I can no longer lose this trade, right? And then 3, still be in the move if it decides to do something crazy and just tanks, right? And just move 1,000 pips in the next 2 hours. I still want to have something in the market to be able to capture that, right? Initially, when I guess the old adage would be, oh, trading's easy. You just cut your losses early and let your winners run. But they don't really give any more context to that. It's kind of like, well, how do we do that initially, right? I like to think that this approach allows me to do all 3 of them, right? So for one, I am taking risk off, right? 2, I am, so taking risk off by moving SL to BE, so stop loss to break even, right? 2, I'm booking profit.
So important. That's so important. If you've got an opportunity, you're in profit, set your break-even levels. I mean, why wouldn't you? I mean, absolutely, always.
You have to, right? And these are these guys where it's like, oh, I was up 4% and they came back and took me out at break even. I'm like, what? What? How are you even doing that? Like, what are you going for? 1 to 30 on this trade or something? Like, you at some point you gotta, because it's a fine line between being greedy and just following your trading plan, right? Some of these guys, they're like, oh, I don't move my stop loss to break even yet.
The lower that goes, say you get that breakdown of that moving average, you're going to be feeling, oh, this is good. This is good. Yeah. But the problem is the lower it goes, the more the risk increases. And you don't lose if you just take your profits. Stick to your plan. The money is made in the middle. So absolutely good advice.
Yep, 100%. And to me, I think this is just greed, right? Because it's that fear of missing out, right? Like Mark Douglas talks about those four fears: fear of missing out, fear of leaving something on the table, fear of being wrong, all of those, and greed, right? This is that. Like, at what point are you going to say, you know what? The move is pretty good. I'm going to move my stop loss to break even. Not even close the trade if you don't want to, but at least move it to break even, right? Because in that moment where you're trying to debate with yourself about what to do, you don't really have a plan. And we all know that that's the wrong time to be trying to make decisions, is when you're in the trade. Like, you should already have what you're going to do before you even enter the trade, right? Because as we all know, you're not the same person. You're literally you're not thinking clearly when you're actively in the trade if you don't have a plan before entering it, right?
And some people will get really frustrated when their break-even level gets hit a little bit more than they want it to. But what I would say to those people is that it's better to be safe than sorry, right? The only thing that's going to screw you up as a trader is losing your capital. So you have to be disciplined. And if you have 3 trades in a row when you break even, then you should pat yourself on the back because your plan has worked. And that's the most important thing. And it's difficult. It is difficult.
And at the end of the day, you just kind of, like I always say, that's the importance of journaling the trades, because you can easily see how many of these trades are breaking even, how many of them are you're booking profits and it still took you out, right? Because so in this example, again, what I like to do is a lot of traders would choose, let's see, continue to let run, right? So a lot of traders would choose one of the 3 things in this. They're like, all right, I'm gonna move my stop loss to break even and I'm gonna stay in the trade and I'm not gonna take any profits. Or, oh, I'm just gonna close the trade, right? And then they're not in the move when it goes all the way lower, right? Let's say this trade ends up going all the way down here. They're like, oh, I sold it too early. You know, like I could have continued to let it run. This approach to me is the best of both of all 3 of them, because you get to do all 3. You don't have to pick. You can do all 3, right? So move your stop loss to break even, so you have no more risk on the table. You can take profits, right? Partial profits, right? So let's just put booking partial profits, right?
Yeah, it's what people forget as well. You can scale out.
Yeah, you don't have to close the full thing. And then the cool thing about this is, right? So let's say in this particular example, let's say you only have a half on, right? 0.5%. You can close half of it, right? And then for number 3, you still have another quarter position in the market if this continues to go lower. And trust me when I tell you, for your psyche, right? It's a lot easier to hold on to a trade when 1, you don't have any more risk on the table, so you can't lose it. 2, you've done the main thing you want to do, which is book some profits. And 3, you're still in the trade if it continues to keep going. So you can do all 3 of these by following this simple approach, right? Stop loss to break even, take some partials, and you're still in the move if it continues to go lower or higher, obviously. Right? So you don't have to really worry about it, because that whole emotional roller coaster you're going through of, oh, wait, do I take some off the table? Wait, do I move my stop loss to break even? No, I think it's going to keep going lower. I want to stay in the trade. You can do this one approach, and this will calm you all the way on down, right? I got an alarm set for 3:55 Eastern, right? Telling me, hey, go ahead and close down everything. Go ahead and close the trades. You could wait a little bit longer, right? But for me, I found out, and also through my data, that 4 to 5 o'clock hour Eastern Standard Time, it's a lot that goes on in that hour. Like it can be dead and nothing happens, or on a crazier day, it can be very, very volatile, right? And you end up being up a decent amount to, you got taken out at break even or whatever the case may be. So I avoid that whole hour and just close my trades at about 3:55, 4 o'clock. That 4 to 5, I let them have at it. I'm already out the market for the day, and I've protected my capital, and I live to fight another day, basically.
That's really good advice. Igor, can I just show one chart and then you have the last word? Because
yeah, of course.
Serious. This whole thing about no man's land, I just want to just really put a full stop underneath. And then we can hear from you. So all I want to say is I want to just bring up Litecoin. And this was something I was talking about all last week. Can you see that okay, guys?
It's not coming in just yet. Okay, it's coming in now. Okay, we can see it.
So, short story, basically, we obviously have, as we talked about, we have a lot of downwards movement. We're in a clear downtrend on the primary, but we're bottoming, as we talked about on total 2. We zoom out, we'll see that this is the bottom, right? So it's a bit difficult. So I originally had this bear flag, this bear pennant, which was in no man's land. And I was attempting to do a short trade where essentially my short position would be here. And I was trying to ride a move down here. But then Bitcoin made a move, which is why we should be paying attention to what Bitcoin's doing, when Bitcoin did its breakout on Friday, and it pushed the whole market up. But now, this trade, which I performed, was essentially because the price action wasn't in no man's land. It had come back up to resistance. It had double confluence with the 1-day 200 MA. And guess what? It was a successful trade, took profits on the point of control, and that was it. And it didn't take very long. It wasn't particularly, it's just a quick 5%, but there you go. And then pretty nice risk reward ratio as well. But the message here is this trade I attempted in no man's land failed because that's where we were. And it could go either way. It's a bit different. Now my second attempt was so much better because I got confluence with a low volume node here. I've got this, I've got this, I've got that, I've got an order block, and it was a perfect trade. And the lesson is I should have waited till it was here and not tried to force it. And I suppose that's the lesson. When we talk about no man's land, that's the lesson, right?
Yes.
For sure. 100%. 100%, right?
110.
It's like that fork in the road. Like imagine someone telling you, right? Like, hey, at some point you're going to get to a fork in the road. It's pretty evident. Make the right. Don't make the left. If you make the left, you're going to go the wrong way. Make the right. Yeah. That's the equivalent of knowing, right, where you need to go versus someone tells you, oh, you're going to see a fork in the road. And that's it. It's like, wait, do I go right or left? I have no idea. You're going to end up in no man's land.
A lot of metaphors today. Igor, take us over the finish line.
Okay, no problem. Thank you. Okay, I will share the screen. Do you see it?
It's coming. Yeah, got it. Yeah. Thank you.
Yep, we can see it.
So I will just share my scenarios that I would like to see this week. So what I want to see is today, for example, what I'm waiting right now is the price to start to fall down. And in one moment to touch the relative strength index around the 50 level. It should be in my projection around 50% of the retracement around 1.2950, something like that. If that aligns and price start to consolidate there and there's some strong movements, I would like to make a buy order. My stop loss will be around 1.2905 level, something like that, here just below the Friday's low. And this trade can be some kind of the swing trade, and maybe it will be just one-to-one trade up to 1.3, just to show that level maybe on some better chart. Yes, so there is one very important level, 1.301. It's a common price that common target that we can see, and it will be one-to-one trade almost if that happens. However, what I say just 2 minutes ago is that this trade can be one-to-one trade like an intraday session trade, but it can be a swing trade if the price start to go very strong in the bullish trend. There is 1.1313, and that can happen only if we see the firms just reduce interest rate for US dollar. And if happens some unexpected news, I'm ready not to close my trade because there are two possibilities there. Possibility number one, nothing change. Everything is the same for 4.5%. Of course, I hope that will be pessimistic view of the US dollar because we know already that. And possibility number two, we will see the interest rate cut and the price will go higher for British pound dollar. For euro dollar, the same story. Everything is the same, only the price levels are different. Of course, there is a very important price level, 1.12. So this level is so strong. It's the highest high from the last year. We are very close to that level. If that happens, if we see, for example, that interest rate just change, we can see that price level. And of course, I'm just monitor Aussie dollar. I'm already in the trade right now. I will just, everything is aligned. Of course, if I add the British pound dollar, it's a little bit risky because I already have Aussie dollar as a trade. However, my Aussie dollar trade is a swing trade. I'm already 170 pips in the profits, so there's no problem with this trade. So I will just monitor, and I want to enter into British pound dollar. So this is my plan for this week. I think that we can see maybe some push higher, because I don't see any news that can be used as catalyst to give strength to the US dollar. So this, of course, market can surprise me always, but I don't see anything special there. So this is my opinion. Do you have any remarks to this?
No, I say that's strong. I want to point something out. Can you go back a chart or two? I'm not sure which one it was. I apologize, but I want to point something out.
I think it's euro
This
dollar.
one,
Maybe.
yes. Let's look at this, guys. The market maker cycle that I always point out. You can see the huge M. It breaks. It retests that area. It breaks, retests that area again, and then goes down and makes the W formation and goes back the other way.
Yes.
Yeah.
It's the same exact thing that I point out every day.
Yes. Yes.
So we need to see if this is going to hit those highs, and we need to see if the RSI line on the other one is going to get hit for an entry, right?
Yes. Yes.
That's great.
So we will see.
Sweet.
I will monitor the market. We will see tomorrow what will happen. So I would like to see some kind of retrace, because without retracement, there's no trade. This is the simple thing.
Yeah.
Sweet. Man, this was awesome, guys. As usual, I always enjoy going over charts, talking about these markets with you guys. You two are awesome.
Yes.
Bless you. It's great
My
to see
pleasure.
you all. Hope you see you later in the week.
Okay.
Absolutely.
I wish you a great day today.
Yes.
Likewise.
All right, guys. Safe trading out
Bye-bye.
there. Be safe.
Bye-bye.
Hello, everyone. I know the music's still playing. Oh, there we go. Perfect.
Hey.
How's everyone doing? Jannie?
How's it
good.
going, Sam? Howard, good to see you guys again.
Yeah, all good, all good.
All good.
Nice, man.
Always a pleasure.
Yeah, I haven't seen you for some time, man. You've been busy in session number 1.
I know. They put me to session 3 right now, so let's have a look.
Well, I'm going to just share, if you don't mind, I just want to share my screen and just talk you through how I've been reading the day from the open. Obviously, there was a news event. I'll just wait for the screen to come through. There we go. Okay. Cool. So today we had, what did we have? We had core retail sales and retail sales month on month. Okay. So that's this little move here. And you can see with the news event, well, compared to the previous price action, it was not the biggest move, but definitely there was a reaction to that price action, to the news event. And this line you can see here, that's yesterday's high. So I was immediately thinking, okay, could we potentially see a day, an up day? But this was the open, this big candle here. So it broke again through yesterday's high, but immediately it was met with R1, that significant resistance level. And it just couldn't push through there. And then the next candle, very, very spiky, very rangy, and the one after. And that's just been the rest of the day looked like that. Yeah. If you look at the half an hour as well, you get this breakout, but that was also pre-market. Yeah, that's 2 o'clock. This is the news event. So we never got, we just struggled. And I think it has a lot to do with, if you look at the daily time frame, if I just open my MT4 here, this is something I've covered last week as well. We broke through that 200 EMA, very significant level. We had this very strong bearish push to the downside, and then we were just ranging for the rest of the week. And today you can see like we pretty much, we're not far off the open where we opened the session. Not the day, but the session. If I just go back to this chart here. Right, this was the open, and this is where we're trading right now. So we're actually trading slightly below the open, the market open, not the daily open. The daily open is right over here. So just, the conditions have been looking like this last week, definitely from Tuesday. And that's what it looked like for the rest of the week last week. And we're starting the week again like that. So I think we may have to wait for Wednesday. Because Wednesday is when we're going to get that FOMC statement and the federal funds rate. Hopefully with the markets we'll start to find direction, and maybe not Wednesday itself, but definitely after this news event. So it may start to find direction Thursday, Friday. So anyway, so that's how I read it. But
no, I couldn't agree more. I came to the exact same conclusion. Oh,
yeah,
sorry.
Of course.
I didn't realize I was talking over to you.
No.
There's a bit of delay. There's a bit of delay. I thought I had a good gap to come in, and then.
No worries, man. Yeah. So okay. No, you were saying you had a very similar read.
The exact same conclusion. So, I mean, you were doing what was that? NASDAQ, is it? I could just about make out what it is. Yeah, NASDAQ. Yeah. So I was doing S&P 500, very similar, obviously. And exact same conclusion I've come to. I think it is FOMC week. I think because of the last push down we've had in recent times, like breaking the 200 EMA, like you said, people are a bit hesitant. There's a bit of indecision in the market. And I think FOMC is going to help clear that up and give a bit of, confidence in
just a bit of clarity. No, for sure. Because I think if you look at if I just pull this chart up again, I don't have it. I logged in with different credentials. So anyway, but where we are right now, I mean, it's so difficult to read this because we are in no man's land. So the key level for me is down here. If it breaks that low, and also the 200 EMA. So those are really key levels. Now, we could range between these levels for some time. I don't know. But it's really difficult to read or to stack probabilities in your favor in terms of to say, what's likely to happen? The probability for one thing to happen over another, what would that be? It's really difficult to read on the daily time frame at the moment. So a really nice push to the upside, and maybe a failure, and something like an engulfing candle, or just something that makes it a little bit more obvious in terms of what you can expect. And that would make it so much easier to trade on the smaller time frames. But at the moment, it's very difficult. And I mean, I think it just reflects on the shorter time frames as well. The indecision that you talked about.
Yeah,
it reflects on the shorter time frames. Now, I'm very nervous about taking any long positions unless we can get this 200 back up to the price action above the 200 EMA. Then that would definitely change the picture. But for now, it's very difficult. And if you look at the Dow Jones as well, the Dow Jones looks very similar. Like if I just zoom out here, look at that beautiful McDonald's double top. Yeah, do you see that? That is a beautiful McDonald's double top there. Also with a close below the 200 EMA. But this one definitely had a very different day to the NASDAQ. You can see this is pushing to the upside, but it's now getting to the neckline. It's also approaching the 200 EMA. So like once we get closer to this level, then, it's going to be, you want to see a rejection. You want to see it like really failing. And then my bias is definitely short for over the longer term. So because of that, I'm a bit skeptical when I see long positions. I'm like, am I going to get sucked into this and get stopped out?
I mean, I managed to jump into one long position earlier in the second session, but I mean, it just didn't have enough momentum to push through. I had to get out just before break even. It just wasn't. I wasn't feeling it, and this whole day, there just hasn't been the volume in the market. I'm seeing low numbers, and that's usually indecision. That's just no one pulling the trigger at the moment. I think you're not going to see much until FOMC on Wednesday. After that, there's going to be more clarity, like you said, give investors more confidence, and because we're really at like you said, no man's land. We're in a weird kind of area, especially in the indices right now, like NASDAQ, S&P 500. We're in a weird kind of zone where it's hard to call long term what's going to happen.
Yeah, it is.
But I tell you, I've got to say it's not really my main market here, but interesting to see the fact that it's trying to go a little bit higher on the Dow. And after the down day we saw the other day, there was no follow through. The bulls came in, so it broke that pattern of seeing multiple pushes to the downside on a daily time frame. So it might be maybe green shoots here. I don't know.
Yeah. I mean, but how would your day probably look very different? Because I know the dollar is definitely struggling. A very good day, but we'll come to that, don't we?
All right.
Yeah. Well, let's move
rub it in our face here.
Yeah. Bye, Howard. You know the button to press. No, but but you can show your screen if you don't mind.
Eject to see. Yeah.
Okay, I'm going to stop my screen. You can show. Yeah, because I had a look at the pound US dollar, and obviously with the dollar index also struggling, the dollar index is like, I think we had this conversation probably a week ago where we had a look at the chart, and it was very obvious that the dollar index was going to go down, and because of that, all the dollar crosses, all the things like the pound dollar, the euro dollar, was likely to head higher. But anyway, sorry, Howard.
No worries. No, I mean they the euro and the pound kind of had their moves, and they've gone into a bit of a consolidation. So on the short, just kind of zoom into the recent action on the daily chart. So yeah, we had the big thrust out of that kind of base pattern, and the ranges have contracted a little bit, but the bias is still, for me, very much to the upside. On the short term, we had like the kind of a 2-day pullback, and then we started to press higher against, but no real momentum at this moment, because I think a lot of people are kind of already long. The big guys have come in. Today I took a little long position on the upside breakout, and it's still kind of a little bit in the money, but really just a kind of like a day trade type idea. On the short term,
beer money. We call it beer money.
Yeah. So we had this kind of on the intraday charts, like an Elliott ABC correction, and these three wave moves, ABCs are against the trend. So if you're doing Elliott wave, then the key is to identify the end of an ABC, and then, as you know, to trade against it, because invariably the ABC moves tend to be completely reversed. So I kind of bought the upside breakout today, looking for a push higher into the close. But that's just the short-term stuff. The real fireworks have come in the commodity-related currencies, the Oz, the CAD, and the Kiwi. Let's kick it off with the CAD. Been looking at that one for the last. Let's just go back to the daily actually. So we had this on the daily. We had this kind of test of the trend line, long upper shadow, rejection, and then it started to break down. A little bit of sideways action, and then we're starting to see the breakdown now on the daily. So you can see that the CAD is starting to outperform the euro against the dollar, because I think all the moves have happened against the European currencies, or the big moves at least. So we're starting to see some catch up on the Oz CAD and the Kiwi. So yeah, basically short.
Sorry, Howard. That was that the dollar? That was the dollar CAD, was it?
Yeah. Dollar CAD daily.
CAD. Okay, yeah. And where would you mark your next significant support level? Would it be at the lowest point?
I guess this one that stands out, 42.39 or so.
Okay.
So we've got that. Yeah. So about for me, it's a kind of like almost like we're forming a kind of an M or a double top or whatever you want to call it, and we're going to be headed down here. That's what it looks like to me. I think the major trend for the US dollar is down. And it's just that these commodity-related currencies have kind of not really participated since the stock market topped out. I think they're a kind of risk-on type thing, where the stock market stabilizing over the last couple of days. Now we're starting to see the move higher in Aussie dollar, Kiwi dollar, and down in dollar CAD. Just looking at the shorter term thing, I had this kind of head and shoulders going on the short term chart, so which is really why I sold into it on Friday, looking for that breakdown which we saw today. So a kind of
very nice
left shoulder, funny sort of head, right shoulder up here, and then the breakdown we've got today.
Yeah, that's a pretty difficult head and shoulders to read there. Oh, they're in the middle. You mean they're right in the middle of the screen?
Yeah, that's your head. Yeah,
that's a bodybuilder. That is big shoulders, little head.
yeah. Well, you got a little bit of symmetry from the left and right shoulder, almost, but it's very much in the eye of the beholder. But at the end of the day, you've got the direction, So for me, we're breaking down in this kind of third wave. So there's the first wave down, second wave up, and now we're into kind of a third wave down here. So that's the CAD, and it's mirrored with the Aussie and the Kiwi. So Kiwi is here. Let's just look at the daily. So we've got that in Elliott wave, you get this kind of 1-2-1-2 setup where you get this massive acceleration in the third of a third, and that's what I think we're doing here. Again, like the Aussie and the CAD, over the past week or two, it hasn't really followed the euro dollar higher. But now we're starting to see some independent strength on the Kiwi. There's quite a big, whatever methodology you use, I think this is quite an interesting breakout. What do you guys think? Does it look like a buyer or a seller?
Without seeing the volume, I would have no idea.
What is the? Sorry, I just want to see. What did you say this was?
A third of a third in terms of Elliott wave.
Oh, the New Zealand dollar, US dollar.
Oh, I'm sorry.
I mean, I think because of the dollar index and the weakness in the dollar, I think your bias needs to be short US dollar, and therefore the patterns that you see on things like the New Zealand dollar, pound US dollar, euro dollar, all of them, dollar CAD. If you can see something that lines up with your bias, then the probability is going to be already a little bit in your favor. As long as you can stack, look there, it definitely breaks out of a resistance area.
Yeah.
So if you connect that with your bias, so if your bias is long because of the weak dollar, then that makes for a good setup, right? Compared to just randomly buying support resistance levels and breakouts, that's not going to work so well. Yeah. So that is like for me, that definitely breaks out. that breaks out of a resistance area. So, and also you can see those two little, when you get that very strong pivot just right after where your cursor is, no, before that, at the bottom.
But this one here,
you see, so you get that, you get that really strong pivot, and then you get that consolidation to the side and now breaking out.
Yeah, this is like acceleration. This is, so that's Kiwi. Aussie, similar kind of thing for the Aussie US. Again, it hasn't. It's kind of ignored the rally in the euro and the pound of late, and we've seen this kind of almost trying to go down, but not really. A bit begrudging, I would say, similar to the Kiwi, I suppose. Perhaps a little bit lower down than the Kiwi. Kiwi's by comparison is kind of up here, but the same kind of idea. Swing higher, correction, then a minor swing higher, minor correction. This is the third of the third that hopefully I think takes you up here.
So how do you if you see opportunity, you see an opportunity on the Aussie US dollar, the New Zealand US dollar, you sit on the euro dollar, pound dollar, do you take all of them, or no? How do you handle that? No,
obviously you've got to kind of, because you're effectively making the same trade. So for me, I wouldn't want to, essentially, if you're buying the Kiwi, you don't really want to buy the Aussie as well. You're doing the same kind of trade. So it's
I was just curious. So look, I mean, the other thing you can do is, this is how it used to do it. If I see an opportunity on the Swiss yen and the CAD yen, I will maybe divide my risk between the two, because the one may have a much stronger move than the other one, even though it's the same idea. The one can move much further. So you kind of divide you're right. It's basically the same. It's the same idea. But the Aussie is not the euro, and the pound is not the CAD. Does that make sense?
Exactly. I think that's why they're doing different things. Whereas the CAD, the Kiwi, and the Aussie are more of a kind of a block, and they tend to do things together, or they have done. So I think that's why today we're seeing the big move, and I think it's related to the stock market, the risk on, because the stock market has stopped collapsing, and in the absence of the stock market collapsing, I think they will go higher. Against the dollar.
And I know you focus on the longer time frames, but your entry is also based on the daily. Is that right, or do you?
Yes,
do you look at
exactly. Okay. I'll use dailies to give me the trigger levels and the stops and that kind of stuff.
Oh, there's another one of those candles, Howard.
Yeah,
do you see that?
You like those?
I love those.
Where it closes in the shadow.
Yes. You see, they always work. Like if you get what do they call it? Like inverse hammer, you can call it whatever you want. Name it whatever you want. But if you get a candle like that inverse hammer right on a support level, that's such a beautiful high probability trade. Really high, especially on a longer time frame, and then you can really time it on your shorter time frames. But you showed the exact same setup. I can't remember which pair it was, but you remember that session, so. That's all that matters.
No. I haven't forgot what you said about that, and it's definitely something that that comes in and can be quite helpful, no question. Particularly at support. When the market's at a support level or a retracement level or something like that, then it can give you an extra tool, if you will.
Yes, like a additional confirmation. But that's very, very well. I don't know who's watching, but if you see that candle, very high probability that's going to trade into that wick. Very high.
Point out the candle a bit more clearer to the viewers.
Sure. Let's go on the monthly, wasn't it? It was on the monthly. Yeah, this one here. So go ahead. You can explain it. But this is a big one.
You can see two things there. First of all, it's like that horizontal line that's been drawn there, that's a support level. But look at the candle itself. You get that small little body. It's a bullish body with an upper wick. Now, I call that the TIS. It's just trading into the shadow. The probability for the next candle, especially if it's bullish, and that's the monthly time frame. So that's a big move. Obviously, the amount of, like in Forex, it's pips. In futures, it's ticks and points. But in Forex, that's a huge amount of pips, and it's the probability for that candle to trade into that shadow is ridiculously high. They just don't appear very often. But if you can see that, that's a really, really, really high probability setup right there.
No, that really, and it ties in. You know, big support, and for me, the structure on the longer term thing is quite positive as well. The fact that we've seen quite a sharp rally from the low and a very begrudging, corrective looking pullback from up here. So could be bargain basement. So we'll come back in a month or two's time and see where we are.
So who out of you two, who was the one who kind of discovered this candle, so to speak? Who's was it Jannie or Howard? It was.
Oh,
so it was Jannie.
All
right.
absolutely.
So I coin it here that in the future it's called the Jannie candle.
The Jannie candle. The Jannie candle.
The Jannie
I don't know
setup.
about the Jannie setup. Yeah, no, I call it the TIS trading. I mean, this is what I said. TIS sounds better. The TIS sounds better. TIS. TIS. Yeah, that's a very good.
In the comments, if you want it to be called the Jannie candle, please let us know. Or TIS. I say Jannie candle. That's my vote.
Jannie candle sounds good to me.
Jannie candle. Oh my goodness, I will not call it that, but okay. No, carry on. Sorry, Alan.
Yeah, no worries. So that's really where I am. So on the currency market, obviously the dollar's been in a downtrend, and but most of the move has happened in the euro and the pound, and now today in particular, we're starting to see catch up in the commodity-related currencies. And I think, as I say, it's to do with the fact that the stock market is not falling out of bed.
Yeah. Falling out of bed. Yeah. But I was going to ask you, like, do you focus on things like, Sam, I've talked to you this off stream, and I just mentioned the ATR, but I've never actually spoke about it during the live streams. But is that just out of curiosity, Howard? Is the ATR something you focus on or not really?
Yeah, I use it for stops and for targets and things. So just to give me a bit of a idea about how far a market should go. So I use the 20-day ATR for the shorter term stuff because it doesn't whip about too much.
Okay, now I will show. I just want to set up my chart here so that I could, I just want to be red. So there's some people in the UK that talks like that. Red, you red?
I've never heard that in my life. I don't know which UK you visited, Jannie.
We do have lots of regional accents, so it could be anywhere really.
Yeah, you know what was the most interesting thing for me was when I went there. This is back in 2004 or something. Was just in London, the amount of different accents in such a small place is this is what's going on here. This is nuts.
Absolutely, it's crazy. You can literally travel 20 miles up north and you'll hear an accent change, or any direction you'll hear the accent change.
Oh, big time, yeah.
It's,
on the radio stations, yeah.
Yeah, honestly.
I just quickly want to find this pips per mile too low. I just want to show you.
A lot of clicking going on there, Jannie.
Oh, can you hear it?
Yeah.
Yeah, it's been me scrolling down. I'm trying to find this because it's not really set up. I've got a spread roller. It's not that one. It's just basically it's just an indicator. You can find it online. It's free. You can just download it. But it tells you how many pips it's moved for the day. So let me show you. Let me share my screen quickly.
Cool.
Okay. So, so this is the 2 ATR and the 14 ATR. Okay, so what I do, how I use this is I like to look at, first of all, the 2 and the 14 ATR, and then the 2 ATR will tell me, what is the ATR over the last 2. Obviously, we've had a consolidation, so the 2 will be way below the 14. But when you get the 2 crossing above the 14, it tells you that the ATR in the short term is much bigger than what the 14 suggests. So it tells you there's a lot of momentum and the size of the candles are much bigger than what the 14 ATR suggests. But in terms of taking profit, and this is what I asked you, Howard, is like how do you use it? But I like to look at the ATR and say, okay, now this is the average price you can move, the size of the candles you can expect over the last 14. So the 14 is 86 pips, and then the 2 is 63. So again, you can just look at the size of the candles apart from today, but look at the previous 2-3 days, and that's why the 2 ATR is dropping below the 14.
Yeah.
But if I see like the ATR is 86, then I like to go for about, that's if I'm like bullish for the day and like, okay, I'm getting a breakout and so on. I'm just looking at the daily now. But if I see that, okay, the ATR is 86, then I like to go for about nothing bigger than 80% maximum of the daily ATR. So if I get a breakout opportunity, like now, on say a smaller time frame, like the 15-minute, for example, say that it breaks out there, a breakout to the upside, I would not take it. And the reason why I won't take it is because I know on the daily time frame, you can see on the left-hand corner here, you can see that's already moved like 78 pips. You just count the pips from daily low and pips from daily high. So that's the 78 pips.
I guess the caveat I'd have against that is small ranges kind of beget large ranges and so on. So invariably, when you get a breakout of a small range, you're getting a big range. So I wouldn't want to, miss out on the opportunity of the bigger range on the breakout.
Yeah, it depends on the time frame that you're focusing on. So what I'm talking about is like, this is the daily time frame. So if you are intraday trader, and you just like, you focus on smaller time frames, then, and you're going to close your positions at the end of the day, you don't want to exceed the daily ATR because you may get into a lower probability setup, and it may pull back and the probability is just much lower. But if you focus like yourself on much longer time frames, like the weekly or the monthly, you are going to get that's a different story, and then you'll focus on those longer ATR values. Let me just see the weekly and the monthly. Okay, so I just wanted to point that out. And I also like to see, like, say on the monthly time frame, where are we at the monthly? So the ATR, obviously, and that's why, like, that candle that we showed, that the Jannie candle, right? The monthly time frame is just, the ATRs are much, much bigger. So the profit potential is also much bigger. So you can time your entries on smaller time frames. But yeah, like 419, you can see that we've already exceeded the monthly ATR. Does that make sense?
Yeah.
And just look at any other candle here. The probability for it to move much higher than that is not that great. Like, you'll typically find it's probably a core CPI day or FOMC day. Like, they stand out. These very big days. They're typically high impact news event days. But other than that, if you are going to, if I just go back to the daily again, if you are going to expect 150 pip move and the ATR is 86, then you are dealing with unrealistic expectations. You're trying to catch a move that's just statistically very low in probabilities. Does that make sense?
Yeah. If you're exiting by the end of the day, kind of thing. Yeah.
If you're exiting by the end of the day, but the same counts for the longer time frames, like if the weekly and the monthly. The ATR is very valuable in terms of what can you realistically expect? Because it's very rare that it's going to go way above and beyond what the average ATR is, unless you get, like, again, high impact news events. That's the only day really. I know, like, core CPI that can really move the market. The last one was very, very quiet. But FOMC can do that as well, but usually when there's a surprise. But other than that, so that is what there was more question. It was more question.
No, it's good. It's good it gives you kind of a handle on the reality.
Yeah, of like what you can realistically expect to, like, the daily range, like what can you expect? So if you are at the lowest point, if you get a breakout on this candle, for example, I don't know if there's going to be anything yet, but we can just like randomly scroll. Look, yeah. Okay. What date was that? The 4th. Yeah. Okay. So here would be, where did that start? Okay. So it starts here. And I don't know, you can just randomly pick a position. Yeah. It's like, okay, it breaks out there. Okay. It breaks out there. And what time is that? Okay. And where's your stop loss? You can just make your stop loss the lowest pivot. Yeah, that could be your stop loss. And then in terms of your take profit, you can like calculate. What I do is like, I want to know, that's why I use this indicator for. I want to know what was the lowest point. I'll probably go back to the daily time frame for that and then calculate, or just count. You just add these two to you just add them up and say, okay, the difference between there and there is what? Say 30 pips. And the ATR is 80. Does that make sense? So like it's already moved 30 for the day. So the range that you can expect realistically is probably another 50 pips to the upside.
Yeah.
And then that's when you need to start to think about getting out. Maybe look for some sort of reversal, maybe over here, for example. I don't know if that was the point. But this is what I mean. So now you can look at price action and say, okay, we are now getting at the upper end of the daily range in terms of the ATR, what you can realistically expect for the price to move. And then you look at price action. So if you start to see this and it kind of, you're stacking the probabilities again, you're stacking things like, okay, the price is starting to, struggle. We're at the upper end of the ATR for the daily range. And so it's a good time to get out.
Yeah.
It doesn't have to be right at that, at the value, at the ATR value.
But it's as you say, it's probabilities, isn't it? That's the thing.
Yeah. Exactly. So that is what I wanted to share. Yeah, like you could I mean, there are so many different things. You're not going to use all of them. Obviously, there's just too much. It's like a telephone book of ideas and strategies and ways to trade. But it's for the people watching. Like you will be exposed to many different ideas and concepts and so on. And it's just up to them to kind of take what works for them and make sense for them and then put something together themselves. They don't necessarily have to trade the way we trade,
Yeah. No, absolutely.
There's no right. There's no right, and well, there's plenty of wrongs, but there's no right.
Yeah, that's plenty of wrongs. There's plenty of wrongs, definitely. Yeah, but it all starts like, I mean, we spoke about this on Friday. It's like it's all about. It really starts with your bias. So you just need to get a good grip of, what is it trending? How very similar to what you're doing. You're looking at the dollar index that seems to be struggling. And you can also then see that reflecting in the dollar pairs, like the euro dollar, the pound dollar, and so on. And then that's how you stack the probabilities and how you get a bias. And then you look at key levels, and then it's a breakout, and that's consistent with the picture you see based on the fundamentals or whatever. And then that's just how you put your trading plan together,
Yeah.
So
that's exactly it. I mean, I'm going to share what I have seen today. It'll be very similar to what Jannie saw earlier. Just because we're pretty much trading the same thing for the most part.
Yes.
Okay. You see, this is annoying me now. All right. I'm going to have to do entire screen share. Okay. I downloaded the TradingView app. Finally, after so long, I downloaded the app. I was only, you know what? I didn't actually realize they had an app.
I still don't know they have that.
Yeah, I didn't know. They never advertised that, right? They never made like an announcement.
Yeah, I thought it was just like.
Yeah. So I was always logging in with the web browser, and then Walter was one day, it's like, "Oh, you're using the app," and I was like, "What, on my phone?" He's like, "No, on the computer." Like, no.
I didn't. Okay, so what you could like? It's like a desktop app now.
Yeah, desktop app. Yeah. To be fair, okay. I mean, is it identical to the web version? So I don't know, but either way, I downloaded it. But I can't now just show that. I have to share my entire screen now. But that's fine. Very similar to what you saw, basically. Had the news come out, pushed up a bit, but then when actually the market opened, we had this long bullish candle, and then it's just kind of been a bit meh. I did get in for a trade. In fact, I recorded the trade, so I can actually play that back. But around here somewhere, I got in for a buy, but I got out pretty much a break even just because it just didn't have the volume. It just didn't have the momentum. I mean, now it has technically hit my take profit, but I wasn't happy holding it for like 2 hours or something, while it just does nothing. And I'll show you what I saw when I entered. And for that, we need the footprint. So this is the footprint. Market open right here, but we're not seeing big volume really. I mean, these are all pretty small numbers. I mean, you got 500 here, 500 here. We're not seeing any major big players stepping in right now. We did have 1,000 contracts up here, but this whole bullish move wasn't really, I don't know, it wasn't as exciting as, it didn't have the volume to keep going up, and that's pretty much why it stopped as well. I mean, it just lacked the volume. There wasn't actually a lot of big players entering. Had a few people trapped right at the top here. I feel bad for them. 700 and 300 contracts, basically 1,000 contracts trapped in that little area there as the market pushed down, but you do see them get out pretty quickly. But there was no like major volume coming in to really cause that pop. Do you know what I mean? That kind of real push to one side. There was not a lot of trap volume. The market pushed down. I'm starting to assume that these bigger sell numbers are literally these buyers getting out. The people who did buy, I mean, you can kind of almost line it up, right? Someone got in with 1,000 contracts delta, roughly around that. And then quite near where their entry would have been, there was a 900 on the sell side. I mean, that's pretty much them just getting out of their position. And yeah, the market kind of just retraced down a bit back into this kind of area here where there was a gap in volume. Originally, it's been filled now, so it doesn't show up in the volume profile, but there was like a gap in volume similar to that right here, and that's really what the area I was waiting for it to come into. We kind of dipped into it, and I saw a few sellers getting trapped on the delta like here. Again, not huge numbers, but for considering the day what we had, 400 was pretty big. Again, another 400 here, so I entered a few positions in the buy, and then I pretty much got out here. I think I can play it back because I managed to just capture it. Yeah, so I entered a few positions here when we saw these trap sellers getting trapped. But nothing, it just didn't really do much. It kind of went up a bit, kept kind of consolidating. It was just pretty much around my sort of entry mark. It did rise quite nicely at one point, and I was like, okay, now we're finally starting to see something. You can see these sellers. If I pull out my little drawing tool, I've got this little pad now. It's pretty cool. These sellers here. Oh, this feels so good. Just being able to draw on the screen.
What's that? What's that? I also want that tool. Where did you get that?
I bought a graphics tablet just for these live streams. So, you know,
wow.
I'm investing here, Jannie. I'm investing into the future.
Yeah, that's awesome. I'm just like, sorry to interrupt you. I just saw there's a bit of a breakout now on the NASDAQ, but it's
go for it. If you want to show it, I can come.
No,
back
no, it's too late. I'll show you. But,
is there big volume on it? I don't know. I can't see.
No, I mean, what right now no, he's on the S&P
on the breakout. Yeah.
No, I don't know. I don't look at footprints.
Oh, okay. I'll have a look in a minute. Because this is going.
Let me show you. Let me do it.
Go on. Go quickly.
Let me do it. Okay, let's do it. Okay, so
stop screen.
Share my screen. I nearly said definitely not that one, but that sounds dodgy.
Not that one.
No. Yeah. So it basically.
Yeah, and he's getting red.
Am I? No, it was a joke. It was like really. It was okay. So what I typically like to see is if you've watched some of my streams, I like to see at least two out of the 3 time frames to show me, what direction I can expect. Now, all 3 time frames have bullish candles, and the half an hour is breaking out of that resistance. And a beautiful sweet spot. But I've been listening to Sam's wisdom. But like this is the 1 standard deviation. Do you see that? So count, get that pullback. That would have been a nice little trade. And the take profit would be at the 2 standard deviation VWAP, not necessarily the 1 or R1 or the previous high. I like to go for something that 1 to 2 is for me is great. That's a great trade. I don't try to aim for the next resistance level because it bit me too many times. Like, okay, a little bit more, and then it finds resistance right, for example, right at this 2 standard deviation, then it pulls back. So anyway, but does that make sense? Like, you get that bullish inside candle, this breakout on the half an hour, breakout above yesterday's high, and this is much clearer on the 1 minute. In terms of trend and 1 minute breakout, I wouldn't take it there, but this is because this area here is still a bit messy, but now it starts to become much clearer. That's the message I always try to convey to people. It's like, when it's not unclear, just wait until it becomes clear. It will become clear. It would have been so much better if I actually took this trade, but Sam, you do talk a lot, so we're gonna have to work on.
That's right. Blame Sam. Come on.
It's Sam's fault. It's all Sam's fault.
I'm sorry.
No, I'm joking. No, but during the sessions, I mean, sometimes I do get like I don't know, Howard, if you've been in a session where I've taken a live trade. I think you have.
Yep.
Yeah. So it's based, and also a couple of recordings and so on, but it's based on exactly the same thing. It's just exactly the same thing. Multiple time frames. Look for confirmation here, and after this mess, that little breakout, and it's just a much clearer picture here. But I would still be a bit nervous, to take longs. I would much prefer to see a short opportunity. I just feel like at the moment with the market, I think you're a bit different, Sam. You like to go long.
I'm a bit bullish at the moment. Up until S&P 500. Let me see where I'm bullish up until around 700 on the futures, so the E-mini futures, right? S&P 500. So I think the CFD chart, the price is a little bit different, but we're talking, how many points away is that? We're talking like 80 points maybe or so away, so it's not far away. I'm bullish up until there. That's the next area where I'll be very interested, where I feel there will be at very least a retracement or push to the downside for a bit. I'm not saying it will spark another, massive crasher, so to speak, but I feel like there will be a pushback around that area. That's so I'm bullish up until there. And I was bullish today, but it just didn't fill me with enough confidence because I just wasn't seeing that volume come through. And, fair enough. Like,
yeah, look, I agree with it. If you have a strong open, like this open here, that's a very strong open. And typically when you get like a really conclusive open, it's very clear where the direction is. Like, it's it can many times anyway, that it's such a great day to go in that same direction, as long as it just follows through. So I typically don't trade the first 15 minutes anyway.
No.
Sorry.
Go on, Howard. Howard.
Yeah, I was going to say just on the US stock market, is there a good time of the day when you think it's making session highs or lows? This is for real going into the close. Is there a time when all the noise is finished?
No, not really. I mean, it can either happen in the first so the first hour and a half or the first 2 hours, that's significant, and also then there's a quiet period after that. It can be very quiet.
Getting lunch.
Yeah, and then it picks up again, towards the end. So, and that's basically, this is the third session, so it picks up. This is around this time, but there's no specific time. Like 11:45. That's when you buy.
Yeah. No. I guess what I mean is there a time of day when you can say, like, when does the high or the low of the day get formed? Most of the time, is it in the opening range, or is it halfway through the day, or at the end of the day, or none of the above?
None of the above. I wouldn't. No, I mean, when you say high and low, does that include pre-market, or are you talking specifically just from the market open?
I'd say the market open, basically, opening bell on the floor.
Yeah, look, I mean, it's tricky. No, there's no answer to that question, because you can get an open going up, and then you're going to get a spike going lower, and then it comes all the way back up, and then you end up just being in that range the whole day. And other times you can get that open to the upside, it comes back down, and then it starts to rally really hard to the upside. And then other times you get like a strong start to the open, and then it just continues in that direction.
Yeah.
So there are many different scenarios that can potentially play out.
Because I know a lot of people do opening range breakouts, so I'm assuming there's some kind of statistical probability behind it.
I mean, there might be.
Yeah.
But I've personally never done the math on it and tried to like statistically work out if there is a higher probability of a certain time of day where that could be the high or the low. I've never done that, but
well, typically they don't. I don't think they draw the ranges based on the open. The ranges are typically drawn from the pre-market. So it will typically be. If I show you, where's that?
It's like the London breakout strategy, right? It's taking the highs and lows of the Asian session into account.
Yes.
And then,
Okay.
So typically what they would do is they would mark this level, You see what I mean? And they will mark this level, Okay, where's the open? That was the open. They'll mark this level, So this is the range. This is the range that they'll focus on. And that does work. But you will not be looking at the things. Again, there are so many different ways to trade. You can't look at this and that and that and that and this thing and that thing. You'll get they end up like a lot of the times just having a look at more than one strategy. The one can contradict the other one many times.
Yeah.
So as I always say, like the one person's stop loss is the next person's entry point.
Yeah.
It just depends on how you trade. Yeah. So. Of course you do, Sam.
That's what makes a market.
So that would be but I don't. Unless they draw ranges from the open, but no. Typically, like you look at how the market is done before, and you can also see the other thing that people like to look at is this. If the pre-market. If the pre-market is outside the previous day's high, and what I mean is like it's been trading outside the previous day's high, and now the market opens and you are above the previous day's high, that's very bullish. Because obviously you are above yesterday's high. I wonder if I can find an example.
I mean, you can use a lot of traders use like the market profile for that. They can kind of figure out based on where the mass majority of volume was on the previous days, and if we're trading above it, below it, inside it, will give us a better idea of what the sentiment is, so to speak, for the next day or for the current day. I think market profile is probably the tool most like traders in the futures kind of who do trade like the futures would probably use, I would say, for that.
I just wanted to point out this the take profit area, the 2 standard deviation. It's a very, very solid point to get to take a profit. But would I go short? Because it's at the 2 standard deviation? No, because I need confluence on multiple time frames. I would not go. This is all bullish, so I need. If it was the other way around, this bearish candle, for example, and then I get a push up to the 2 standard deviation, then that would make for a good short trade. Any kind of support resistance you can find there.
Nice.
Oh man!
Wow.
Sorry, Howard. I was going to ask you something on your, if you don't mind, just sharing your screen there.
Sure.
We've got Robert back in the chat. Robert, how are you doing? My favorite viewer and fan.
Hey, Robert.
He's awesome. He's here in every session, so we've got to always show Robert love.
Yes, Robert. Always nice to see you. I usually see you when Sam is live.
I promise I'm not Robert in the background. I can actually. He's a real person. I promise.
Are you Robert in disguise?
Okay. What I was going to ask is like those, what do you call it, those Elliott waves?
Yeah.
You did mention that you manually draw those areas. Like, do you have a specific way of identifying those levels? Like, what's your process to identify those swings, or do you just look at the previous?
Invariably, as I say, I tend to be looking for the way the structure works. You tend to get 5 waves in the direction of the trend and 3 waves against it. So what you're trying to do, let's just go to the euro dollar, for example. What you're trying to identify most of the time are 3-legged moves, where you get a swing, a pullback, and then another swing, and that's the end of the move, like this one. So a kind of a push down, a correction of it, another push down, and then that's the end of the move. So that tells you that is a correction of that, and you're looking for the next move up within this cycle. So I'd say the key to Elliott is not trying to predict every single wave, and you'll just go crazy. If you can identify the end of an ABC pattern, for example, then you've got a good idea as to which way the market is likely to go.
Okay, yeah, because I mean, yeah, because the way I see it, I don't trade Elliott waves, obviously, but it just looks like because it can be confusing, because it looks like it's just a matter of identifying the swings, like, right, you like the high, the low, and then the next high, and then the next low. But what can be tricky, I think, is like, how do you know the cycle is over? Like, what do you look for to know that the cycle is now over, and now you're going to start all over with your count, your ABC, and then 1, 2, 3?
Yeah, I'd say you're just looking to identify the waves, really. You're looking at the substructure. So if you see a very kind of choppy decline like this one, for example, and you really struggle to break it down into 5 waves, then the likelihood is that it's a correction. And then obviously you're looking behind it to see what came before it. And then if there's a clear impulsive move before it, then the odds are pretty much stacked in favor of the market going higher. I did that quite a bit with some of these gold pullbacks lately, before it blasted to new highs. There were so many of these ABC pullbacks on various time frames. Let's see what we have here. Yeah, this one, for example, on the gold, I think we were looking at it, where it had this kind of the pullback. There are lots of what we call overlaps between these waves, and if the market is making lots of these overlaps, then invariably it's a corrective move. So what you're doing is you're looking at they call it the internal structure of the move, and if it breaks down into lots of choppy waves that overlap with each other, then it's most likely to be a corrective wave.
Okay. Yeah, see, for me, I would just like, if I had that chart, I would just remove all of that stuff.
Yeah,
just because, like, my Elliott wave, I think it takes a lot of practice to really get the hang of it.
Yeah, totally. It's not for everybody, because invariably what you're doing is you're trying to predict every single move of the market. And for me, I think just cut out the middleman and just wait for the completion of a clear pattern. Particularly if you've got a swing in the direction of a larger, what looks to be a swing in the direction of a larger trend. You look on the larger time frame and you see maybe 2 or 3 candles that go in one direction. That is likely to be an impulsive wave, and so on and so forth. So it's just combining the wave patterns with with other things like bar chart and candlestick combinations for me.
Okay. Yeah. So so it's not just the waves. Okay. So the price action, obviously, you showed the trend lines and things like that.
Yeah, trend lines for me are not that important really, unless they're being respected. But for me, I like to see the for example here, this is the long-term gold, where you had that kind of 3-legged pullback here, kind of a false break, almost like a double top pattern here that sucked a lot of people in to go short, but it turns out to be an ABC correction.
Yeah, you see that this is exactly what I'm talking about. Yeah, like when you draw trend lines, it can be very like, my trend line will not be connected to the same lows compared to the trend line you are drawing. Does that make sense? So because if you look at that the point you just showed, is that the chart you just had on?
Yeah. Just zoomed out.
Okay.
Yeah. Oh, hello.
Okay. Well, if you draw like a trend from that low to that first leg up.
Which one?
That one where you are right now.
Which one's that?
Just go to your low.
Oh, across like that.
No, go left.
Where to?
No, you can
go
just yeah, you started just look at the lowest point. Yeah, just go, just like that. Okay. Something like that. Fine.
Like a trend channel kind of thing.
So that is how you need to move the line up to really tight with that uptrend.
Okay. So
it needs to hug that trend. So the point I'm trying to make is if you just go up until not that low, maybe higher.
Okay, higher.
Yeah, so it needs to really hug that. Okay, leave it there. Okay, so but the point I'm trying to make is it doesn't have to be accurate. The point I'm just trying to make is that if it depends on like how do you draw your trend line? Are you going to, because that isn't definitely an uptrend, and some people will draw that trend line, and when it breaks that trend line, okay, this is a break of a trend line, and now we're going to go short. Where other people will say, no, I need to have at least 2 touches. So like there's a rally and then it needs to make a pivot, and then you connect those 2 low points, and then that's your trend line. Does that make sense?
Yeah, I'm not really a trend line kind of guy unless I see something respected.
Yeah, neither am I, because it could be very subjective. It's very that's what I'm trying to say. Like nobody's trend line will look the same. Like I will connect it there, you will connect it that way, and
so no, I agree.
Okay, great.
Yeah.
Well, have a good evening.
Yeah.
Just wanted you to agree. Sorry, Sam. I've been.
That's absolutely fine. That is good. The viewers can learn. Different strategies, different things, different ideas. Yeah. This is what it's all about, right?
Many ways to skin the proverbial cat.
Exactly. Well, very well said.
Are you there, Sam?
Yeah.
Oh,
did I freeze?
Oh. You did freeze.
I don't know if it was the camera or me just glitching in real life. I don't know. I've only had 1 coffee today, and it's the late session. I'm having a little nap. Right? It's my nap time usually.
Really?
Little siesta. Just had lunch, a late lunch, and blood sugar spiking. It happens, but.
I'm now on coffee without any sugar, and it's not much fun. I'll tell you that. No. It's not a lot of fun. It's not the same. It almost feels like medicine or something, like punishment. It's not the same. It
pretty much is, to be fair. Without sugar, I don't know. Like when people have it with no sugar, no milk, nothing, I'm like, you're insane.
Yeah. Just dust.
They swear by it. They're like, "Oh no, the only way you drink coffee." I'm like, it really isn't. I mean,
So, sorry.
I hope you don't mind, but I'm going to pop up my screen again.
Yes, of course.
You'll see yourself.
Robert's talking about footprints over there.
Oh, is he? Okay. You're going to see. Let me first remove this because it's going to look really messy while I read the comment. Robert says, doing okay. I didn't get too injured in softball last night, just a bruised knee. Whoever's in the back, just leave my screen off for a minute because I'm reading the comments and it will look really weird. All right. Just a bruised knee. So that's a plus. Red day this morning. So I guess I used up my luck with no injuries. Hey, look, it happens, Robert, man. I mean, red days do happen, sadly, but it's about turning them green.
Well, Robert, you did. You probably missed the beginning, but it was a difficult day. So
yeah, it really was. It depends what you were trading. Let us know what you were trading. We can have a look. I really need to learn how to see this footprint stuff fast enough. Sam and Bisgrim. All right, let's get into the footprint. Let's do it. Add to stage. Right. You should be seeing. So I'll just go over that trade I took that failed, because you can still learn a lot even from a failed trade, right? So where was I? Yes. So we dipped into this gap of volume, right? And then we saw the sellers coming in again, generally low. I mean, nothing big, 500. We had a bit bigger numbers here, 600 and 500. So I drew a little box around it, hoping we'd break above here and then I can add some more positions on. But yeah, as we started breaking above it, you can start seeing them quickly leaving. Everyone is very nervous. Everyone's exit is really tight, okay, in a market like this, where there just isn't much follow through. No one is kind of huge stop losses. You don't really see it. People are getting out fast if it's not going their way pretty quick. And that's basically what we're seeing. I'll fast forward it a bit more. We do start, I don't know what happened there. We do start breaking into that area. I'm getting a bit happy now. I'm thinking, okay, finally we're starting to make its move. We almost break above it and it's just struggling, really struggling from all these sellers here, just kind of defending it. These, I'm not going to name them anything bad, but these people who really peed me off a bit because they just weren't letting go. But yeah, it just wasn't breaking it, you know. Otherwise there I would have entered much more aggressively if we broke above that and start seeing them exit. And then you can see, you know, my friends, the buyers, the people who are like me, also leaving their position and new sellers coming in. And at that point, I realized we're just going sideways. I kind of looked at the overall structure on the on the candlestick chart. Didn't like what I was seeing. I got out. So pretty much a failed trade, right? But these things happen. Like now I look at it and I'm annoyed because it's just blown through, you know, 2 hours later. But this is just how it is, really. We just weren't getting the volume today. And I don't think really there's any major volume coming into the, yeah, okay, there was a little bit of big volume. Someone, finally, that's the biggest volume we've seen all day right here. So some institution finally entered. So, but again, look, I mean, it's quite late in the day. If we saw that
Very
hours
late.
ago, that would have been nice, but we just didn't, sadly. Very late in the day. I think I'm assuming that was.
But you also, but
all right. So we had a few. Oh no. Aha! 1 second. See, this is why you got to read to Robert, who wants to learn the footprint. You got to read it as a story, right? What do we see here? We had the last high, right? So if I stretch this box across, okay, we'll make this really easy. We had loads of buy entries right there. Were those new buyers or was that just people getting stopped out? It's just people getting stopped out, right? That's people exiting. That's sellers literally getting liquidated, right? Out of the market. That's what this is. That wasn't actually new buyers entering. So you got to read the market as like a story, right? Try to figure out exactly what you're actually seeing. So that did release some sell pressure in the market. So we should start seeing it get a bit higher now. And my next area is this area here. That's where I feel it's the next point where, you know, we're going to have a push down potentially. But until then, I'm even early in the morning, not morning, but earlier today, my bias has been bullish all day pretty much in this market until around this area and then this area and then this area. And, you know, these are where we're going to see pushbacks, you know.
Yeah, those are the little hurdles. Yeah, I see something similar. But for me, and like on the NASDAQ, which is, I know they're similar, but you know they're not identical, obviously. But I can just quickly. I'm sorry, I know you're busy with footprint charts, so maybe carry on with that.
Do you want to? Okay,
sure.
Give me 2 minutes. There was something I wanted to point out. What was it? Yeah, so, but what is good about a market like this? I know we got FOMC coming up, so there's going to be a bit of indecision before those numbers actually, well, not numbers, but till the actual statement comes out. Until Jerome does his thing and, you know, gives us a bit of direction. But until then, I know it's going to be a bit boring, the market. But what is good is that we now have data to the left of us, quite recent data, right? So if the market comes, you know, to this area, I could potentially short it, right? If it shows on the footprint there's a short opportunity, I can short it. When the market is going down, say it does drop, and I see more gaps in volume somewhere, I can then also potentially buy the market at some point. And then I can also, so I can trade actually in both directions now, as a scalper should. Whereas before, when we just had this nasty drop, there was nothing to the left of me. So I could only ever short the market. And I have to wait for those pullbacks to occur in order to get an entry, right? So literally half of my opportunity was just not available because there was no data to the left of me. But now that we're trading, we're trading a bit higher now. We're not at, I'm not going to say all-time lows because they weren't obviously all-time lows, but lows for a long time, basically. We've actually got a bit of data that I can now use and find areas where there's going to be a bit of interest in the market. So that's what I'm happy about. I'm happy that we're kind of, I've got more opportunity now. But that's pretty much all I wanted to say.
Okay.
I will
Makes sense.
go back.
I started a joke. No, wait, let me just.
Oh no. Robert drinks his coffee black. That is the way. Robert, I don't know how you do it. Drinking coffee black. There's got to be some sweetness to it, right? It's just too acidic. Like I could feel my teeth literally melting away when I drink coffee black.
No, I just quickly wanted to show you on the NASDAQ and just how I'm reading this at the moment is on the 15-minute, I can see that we are basically back to the session highs, which is basically the open. So we're at the session high, but we at the same time, this is also a resistance area. So that's the first thing. And then the second thing is, like, if I just look at this bullish count, there's a number of bullish candles in the row. And, typically, I'm not saying that's what's going to happen, but that's just how I read it. And what I would like to see is, like, first, if it's going to go long, to first pull back. And at least give me a couple of bearish candles before I would look for an opportunity to long. But, it can just break out. But for me personally, I don't feel comfortable going long at resistance areas. If we can get a push and a close above that level, I'd still be a little bit nervous because usually, I don't know if you'll agree with me, but if you just get like that strong bullish candles in the row, loads of them, it's like, okay, it has to pull back. And sometimes you miss a move and it just keeps going higher. But it's just like you increase the probability for me anyway. Is if I can just get
the whole ATR thing you were saying as well, if it moves already quite a bit, like, you got to set your expectations. If it's already moved so bullish, especially candle after candle, and it hasn't had a pullback, jumping in, that would make me nervous as well.
Do you find the same, Howard? Like when you trade, do you also, like, if you see this very long bullish count of candles?
Usually it means that there's going to be some kind of correction, whether it's a price correction or a time correction or both. Maybe you're bullish, but you need to see a little bit of willing on the side of the shorts. Let them come in and have a go at it, and then wait for the next bout of strength, I think.
I think, but for me personally, sorry, Sam.
No. I was just going to say, people are always going to take profit and get out the market. So when you had a nice move like that, you better expect some people are pulling their money out, and that is going to slow it down essentially.
I think, like, the thing for me is, like, because I'm not really I just struggle to get a good read, like today specifically. And then during those times, you're just better off staying away, and just wait for those days when it is obvious, because when it's obvious, you'll know, and it's like, we can all go back and look at the perfect opportunities, but you know what I mean. Like you can just see, it's like it's all lining up, it's all busy happening. But those are the trades you need to wait for. It's not always possible, because I still get into trades and I'm like, okay, that was not a good one. But I control my risk, and it's not an issue. Like, you control your risk, you get out, and you just wait for the next one. But anyway, I just wanted to show. I think on your chart, the S&P 500, it actually made a new high, right?
We just Yeah, we broke through the high of the day, the earlier high of the day. We've made a new high pretty much today. Yeah. But I still think it's going to go a bit more. It's got a little bit more left in it. That area that I had marked out, I think that's where it's going to go.
Okay.
Got another comment from Robert. He goes, yeah, I was longer this morning on the NASDAQ. I made some of the losses back with the downs and up afterwards, but I had to leave to work. Yeah. These things happen. I mean, the NASDAQ, very similar. I mean, you were analyzing the NASDAQ earlier, very similar in the way it moved today. Today was one of those days, so don't take it to if you had a loss earlier, don't take that too much to heart. Today really was a bit of a low volume day. That just wasn't that much oomph in the market. You could have made money, but only really in hindsight could you have been like, yeah, that just wasn't enough push. I should have really had a lower take profit. I should have really been a lot more realistic with my expectations considering the volume today. But again, I mean, these are a lot of times, you see it clear in hindsight, but at the time, you see something else, right? That's just part of the game in trading. But don't take it to heart. Today really was a bit of a tough one, I would say.
Yeah, Robert, I agree with you. Like you say, you like the break above and then wait for a pullback. Yeah, that is exactly how you should play it. Look, whether we're going to get the break and the pullback, that's a different story. But that's a very good game plan. That's a solid game plan. A break above the resistance and then a pullback, a retest, and then a continuation. And then the beauty about a retest is like it really is, well, if you focus on longer time frames. But I do the same on the 1 minute time frame. But if you were, say, trading on the 15 minute, it's like that retest area and then a continuation. It just really helps you to make your risk really tight and to get that risk reward ratio you're looking for, which is exactly what I do on the 1 minute time frame. So it just depends on the time frame you feel comfortable with. Not everybody likes the 1 minute. Some people feel more comfortable with the 5 minute or 15 minute, and other people go out even further. It's all personal preference. There's no right or wrong.
Jannie,
time frame to Am I talking
when
too
you
much
use
there?
No, I've got questions. When you use the 1 minute, what exactly are you analyzing on the 1 minute? Is it the structure? Is it like what exactly does the 1 minute give you?
Very straightforward. The 1 minute is basically just I want a setup. So something that breaks through support resistance. Obviously, I need to have a bias first. So if I have a long bias, like the trade I showed you over here. Now I've got a few things on here. I've got the VWAP, I've got the pivot points, EMA, and then those are the main ones. Support resistance. So if I see that on the half an hour we broke out, on the 1 hour there's that nice little inside candle, on the 15 minute is also bullish, then I want the 1 minute time frame just to make sense. And what I mean by that is like, okay, I need to find an opportunity to go long, and that can be a breakout out of resistance. In this case, I think I mentioned this VWAP line here. The VWAP is also a significant, in this case anyway, it's also a support resistance area. So it broke through the VWAP, the one standard deviation, and then it pulls back, retest, and then it shoots back up to the upside. But this is you can't trade the 1 minute, the way I trade anyway. I can't trade the 1 minute by itself. It's obviously a confluence of what I see on the bigger time frames. But on the 1 minute, I'm just looking for an opportunity, very basic, that lines up with everything else I'm seeing. Mm-hmm. So it's not, try not to complicate it too much.
Yeah.
So that's what it, so yeah, we got sorry.
So Robert says, yes, I like the 1 minute and 15 second on the entry. 15 second.
Oh,
Robert.
wow.
That's look, I mean, what I have to say, like if you're trading the footprint, if you are genuinely going to trade the footprint, Robert, I would say stay away from the 1 minute, because the whole point of the footprint, if I share my screen really quick, so I can give you an example. No, it's fine. It's fine. I'll quickly hit share. Entire screen. Go. Add to stage. All right. So this is the 15 minute, for example, right? Now, look at these contracts here, for example, like 1,000, 1,000. This whole area, I'm going to just I mean, the box is already drawn, but let me just draw it just here so you can have an idea, right? That whole area is obviously interesting, right? Imagine there's a lot of people buying, okay? And you know, okay, we have identified that wasn't actual people buying. That was just people getting stopped out or getting out the market, sellers getting out. But say in this scenario, hypothetically, that was a bunch of fresh buyers entering, right? So you know it's going to be, because it's in such a small area, such a small price range, it's a good chance it's probably a big institution, right? Someone of, or you know, a big entity with a lot of money on the line, right? But if we're now dropping it to like the 5 minute, that same area, okay, you can kind of see it in the 5 minute still, 2,000, 1,000. It's still, because it's now the actual price range on the 5 minute is a bit bigger, right? So you can see that's the price range it's calculating now on the footprint, right? It's a bit bigger. Okay, let me just delete that. But if I put it on the 1 minute, there might be a chance, okay, not always, sometimes you can still see it on the 1 minute, but there might be a chance it's a lot harder to spot. Okay, so in this example, because it was literally a stop, it was just stops, right? People getting stopped out. So it was at one, like a real clear level. You can see it. But on other times, let me show you. You might not see it. This is why switching between time frames on the footprint can be really beneficial sometimes, right? Especially a bit higher time frames. I wouldn't go up to like an hour or something, because then your area will be massive. But like if I just find like another area that had a bit more volume to it. All right, look at this 700 right here, for example, right? On the 15 minute, we can see 700 contracts, right? If I drop it down to the 5 minute, where was it? You can still see roughly 700, not bad, right? Now, if I drop down to the 1 minute, if I can actually find where the hell it is, it might be harder. It might be harder to spot. Yeah, here we go. Look, very hard to spot, but there were 700 contracts there. You're seeing 278, 200. Do you see what I mean? So you might not realize there's a lot of people trapped here, because unless you're calculating, because the minute moves so quick, right? Unless you're literally adding up in your brain 200 plus 78 minus 45 minus 218 plus 51 plus 1, like you're not going to know, right? But there's a lot of people getting trapped in that area. Okay. So that's why sometimes zooming out, using a bit of a bigger time frame for the footprint, can actually give you a much clearer picture where the money's trapped in the market, right? And that's ultimately what, I don't know where the hell the chart's gone. There it is. That's ultimately where, you know, what you want to be looking for, right? People who have money trapped in the market and are forced to exit, right? Because that usually makes the market pop. But that's pretty much all I wanted to say. Oh, we're getting to that area. You can already see the sellers or buyers getting out. Very close to that area. This whole area will be my next interest. Obviously, I don't think from today we might see a little bit of a push into it and consolidation or something. But
the NASDAQ is like, it broke through that resistance area and it just keeps going.
Oh, is it really, really powerful right now?
It's actually now, it looks more like your chart now, like because you showed your chart before I did, and yours already broke out higher, and the NASDAQ didn't. It was just at the previous session's high, but it now broke out, yeah. But
we can see.
I just like it needs to pull back. Sorry.
Yeah, no, I think a pullback's coming very soon. I think it will be in this area. I think a lot of buyers are going to be getting out the market in this area. We're already seeing some buyers getting out, 300, another 300 contracts. These were definitely people exiting, buyers exiting. We're starting to see, it's interesting to see how the numbers jump, right? A lot of the time as well. Look how the numbers are jumping. If you see like a massive number and then it disappears, you know they just got absorbed, like boom. Just eaten up, swallowed, whatever you want to call it.
Yeah.
But yeah, this is an interesting area. I wouldn't want to short the market now or anything, because I don't think it's too late in the day. I don't think anything's really going to happen. But that would be a nice area. I see a gap in volume here. So my conclusion, not conclusion, but my what's it called? My sentiment, if you want to put it that way, would be something like this. it might drop down again. And this isn't like this will happen. This is just based on, I guess, experience, like of what I've seen. But I wouldn't enter it until I see until the footprint tells me yes, enter, and then maybe a continuation back up again. Maybe. I don't think this area will hold and actually push down and continue a downtrend. I don't think this area just isn't powerful enough. I don't think it is. But there's definitely going to be a bit of reaction and a stop in price, and we're kind of already seeing it. These sellers are I'm not saying coming in, but buyers are getting out. You can see the numbers dropping. The sell side, the numbers are getting a lot bigger. The buy side are getting smaller. You're starting to see that happen as people are exiting the market, lifting off their positions. But yeah, that is pretty much that.
Well, I'll show you quickly, just to go back to the NASDAQ quickly. Share screen. So many questions. Just share the screen. There we go. Press this one. Press that one. So this comes back to the question you had earlier, Sam. It was like what would I look for on the 1 minute time frame? Now I have these standard indicators that's just built in here, and they show you these little arrows. The arrow just means I like to have them on. You can switch them off, but it's just sometimes when the candle closes very close to say in this case the resistance area, like did it close outside the resistance line or was it inside? So the arrow will just tell you, yeah, it definitely closed outside. That's the only reason why they're on. I was hesitant around this area for the reasons I gave you earlier, and that's why I wouldn't have taken this trade. But if the picture was much clearer and I felt more confident, then on the 1 minute time frame, as I said to you, I look for any call. So this is the breakout. This is a breakout over here as well. But when you get a breakout, you want to see a continuation. Very similar to the open of today. You get this breakout, it just doesn't continue, it just fails. That's your first sign that you could potentially be in a range. You want to at least see that first 15 minutes high that it continues. So same year, you get a breakout, but it just immediately fails. Now you get a second breakout. And on the second breakout, obviously, these things you need to feel confident or at least comfortable with what you're seeing on the longer time frames. It breaks out for the second time, and then you get the retest, and then it breaks that. Does that make sense? And now it breaks that breakout high.
Yeah.
So that is this is where you're going to enter, and you don't like this. The only issue is here is there's no clear resistance line that you can see on the chart. So you'll just go for a 1 to 2 or something like that. This line here, it just shows you today's high, so it's not a resistance area. But does that make sense? So obviously I just left that completely alone because of the candle count. It was at resistance. I just don't like the setup myself personally. But if it was like over here, this is very, very different. This is the second candle after a bit of a sideways range. That's a very different setup compared to this that traveled so far to get to this high. Because if you think about last week, what we had was very similar, but last week we had these big swings, these ranges, like big ranges, and then it gets right to the resistance area and it comes all the way back down. So it's tricky when it's like this. So it just made sense for me to wait for a pullback. If I don't get it, then no trade. That's fine.
Yeah. Interesting. Very good. Okay, how much time have we got? We've still got 7 minutes. Let's have a look what the comments. Robert goes, footprint I have at 1 minute and have been looking more at the 5 and 15 minute now because of Sam. Yeah, so the footprint, you can use the 1 minute, obviously. Like the 1 minute's really good at noticing where people got stopped out. If there's a lot of stop orders and they all get hit, or one very single institution, you'll be able to see them on the 1 minute. But generally speaking, institutions are smart enough to not place an order in one massive order. They break it up into bits, right? So using the longer time frame, you can see roughly where they enter, where the volume is, So it's still 5 and 50 minutes, still pretty good for that, or better than the 1 minute. Then he goes, yeah, that's what I'm starting to figure out. I can't see and calculate it fast enough. I've been feeling like the 1 minute is only helpful if it's trading sideways with decent volume. And I agree with that. Yeah. And he goes, to be fair, I have 2 Samsung 57-inch Neo G9, so I don't have to switch back and forth between my time frames. Damn. Robert is he's got the whole setup. No, that's good. Big screens and everything. I'm assuming that's what a Samsung 57-inch Neo G9 is. 2 big screens, right? So you got a 100-inch screen essentially. Like, oh, bloody hell. You haven't got a trading setup. You got a cinema there. And we had James Cooper go, how can I identify fake breakouts and avoid being trapped? Oh, very. For me, I would say the footprint would be the best way to identify that, right? Don't always be the sheep, right? Don't always be the first one to kind of get in. Let other people take the risk for you. If it works out for them, all right, you missed a trade, you could say, right? Or you could jump in a bit later and have a bit worse risk reward if you want. But if it is a trap, let them go first. If it doesn't work out for them, then and you can, and then it's 9 times out of 10 it works in your favor. If it is a trap, you'll be able to spot. So don't be, in my personal opinion, don't be the first person to jump in. Let other people take the risk for you, and you can really see that in the footprint with the volume, right? As I've explained many times, it's a trap setup. Who is putting a lot of money on the line and it's going against them, and the moment they get out the market and they all start dropping out, that's when you jump in. Okay, let them take the risk, and then you kind of ride the wave.
I think, like, just to add to that, it's also important to be aware of the fact that you can't avoid all false breakouts. You will get stopped out. You will. It's just we spoke about this a few times. Try not to focus too much on avoiding losses at all costs. Losses is a very big part of trading. You're gonna have to accept them, and when you're wrong, you didn't necessarily do anything wrong yourself as a trader. Even when you look at whatever you want to look at, sometimes you'll just get stopped out, right? And not sometimes, a lot of times you'll get stopped out, and forever. Like it never goes away. Like it's just a big part of trading. So that's why we had a session about talking about your risk reward ratios and your 1% and so on, and how they all work together and tie in together. But just be careful to try to avoid losses at all costs, because that's a very deep rabbit hole.
Yeah,
you can you're just going to look at all your losses and see how can I avoid that, and it's not really the best thing to focus on. But I think the answer Sam gave you is pretty good. But I was just trying to add something towards the end, saying just try not to avoid all of them, because it's impossible. It's impossible.
It's a cost of doing business, really, at the end of the day. So.
Every business has losses, right? If you open up a shop, there's going to be people stealing stuff, or it'll break before it gets to you, and and companies have to write these losses off. That see getting stopped out occasionally. That's just a business expense, right? That's the way you're going to look at it. Essentially, it's a cost you already factor in, right? But the moment you start getting the mind frame, I got to be 100% correct. As Jannie said, you're gonna, because one day you'll be trapped in a trade which is going very bad, and you cannot allow. It wouldn't have even been a big deal if you got out when you were meant to, but you just can't get out because you have to be correct. You have to be correct, and then it becomes worse and worse and worse and worse, and before you know it, you've lost 50% of your account when it could have very easily been avoided. So
yeah.
Accept the loss. Embrace the loss. It happens.
Yeah. Like I think I mentioned on was it on Friday with like the world champion stock trader, like Mark Mernavini. His success rate is 50%.
Yeah.
He loses half his trades, but it's all about just getting out when you're wrong quickly. Just get out, take your loss, wait for the same setup or whatever your playbook is. And just stick to the process. The process is so much more important.
Yeah.
And just stick to the process. Yeah.
And if you make, like, if you do get out, like, look, I took a trade earlier. I got out at break even pretty much. And okay, now I look in hindsight, I went straight to my take profit if I waited 2 hours, But okay, you could say it was the wrong decision, but it's still not the wrong decision, right? Because although technically I could have made more money, right? The problem is next time if I have that thinking, if I'm not reacting to what I'm seeing, because that's all you got to do, react to what you see. Don't be blinded by the idea it has to go to your take profit or it has to do this. It doesn't have to do anything, right? It can do whatever the hell it wants in theory. So don't get blinded or kind of like stuck in that mind frame where it has to do something. If you see something which contradicts and it's telling you, hey, look, get the hell out of this trade, you have to just get out. And even I know it hurts when you do get out and you're like, and then a couple of minutes later it does exactly what you were hoping it does. All right, it sucks, right? But at least as a scalper, as a more short-term trader, it's the only way you can I think you can really survive as a short-term trader, because your success rate, like you said, even with 50%, if you're quick to react to, you can actually make decent money then. You know, it's about reacting to what you see quickly and just no regrets, essentially, right? I think I explained that half well. I kind of rambled a bit.
Daniel Tucker, lekker to hear the SA accent. Yeah, Daniel. High five. Yeah, but anyway, guys, lekker. Yeah, lekker is a lekker word here in South Africa. Like, yeah,
it means like tasty, right?
It can mean that, yeah.
I'm fluent in German.
I'm having a lekker time. Lekker can mean so many different things. Yeah.
See, in German, I'm fluent in German. Lekker means tasty. Like, oh, lekker, nice.
Yeah. That's one of the meanings of the word. Yeah.
There we go.
All right, guys. But I think that's
awesome.
it for this session.
All right.
It's great to see you guys again.
Yeah, Jannie, Howard.
Good session. Enjoyed. Yeah.
Great. And hopefully
have a good one.
Next week, or not next week, later on in the next few days, we'll have a better trading day. But yeah, keep your heads up. It will happen. FOMC Wednesday. Don't forget it. Big day. But that's all I want to say. Anyway.
See you guys soon.
Take care, everyone.
All right.
Take care.
Cheers.
Thank you.
Have a good one.
Bye-bye.
Cheers. Bye-bye.